Thank you, Manoj. Thank you for having me here. Uh, so I'm Anjana Rao. I drive business transformation and strategy at India First Life. I've been associated with them for good 6 years now and overall 20 years experience in life and non-life insurance. Yeah.
Fantastic, Anjana. Thank you so much and welcome to your introduction.
Thank you, Manoj. Good to be here. My name is Swinton Chatterjee. I work for Bajaj Allianz General Insurance Company, and I do an interesting role, which is running tech and running P&L for businesses, digital businesses. So happy to be here.
Thank you, Saurabh. Welcome aboard. I request Amit for his introduction.
This is Amit Kaplial. I am from Manipal Cigna Health. Proud to be part of the founding members. From insurance perspective, this is my 15th year in the insurance domain.
Fantastic. And before that?
So before Manipal Cigna, I was a part of the AXA Group startup in India.
I mean, before insurance?
Before insurance, I have served close to 3 years with National Stock Exchange, and prior to National Stock Exchange, I have served 3 years with IDBI Limited.
Okay, fantastic. Great. Let's have an introduction from Suchintan.
Yeah, thanks, Manoj. That's perfect. Glad to be here. Hi, everyone. My name is Swinton Chatterjee, and also glad to be the second Chatterjee on the panel. So I'm a partner with Deloitte. This is my 18th year in financial services. So financial services business advisory is what I look at, and I lead our digital transformation work in the financial services space. So look forward to this interesting interaction.
Yep. Thank you, Suchintan. May I request Srinidhi for his introduction?
Hi, everyone. Very nice to meet all of you. I'm Srinidhi Shamrao. I'm the Chief Strategy Officer for Aegon Life. And like most of you, I'm a new kid in the room as far as insurance is concerned. I just joined Aegon Life, and before that, I have been a management consultant helping organizations go through digital transformation and ethical transformations for the last 18 years. Worked with most of the Fortune 500 companies.
Great. Thank you, Srinidhi. May I request Palash for his introduction?
Hi. Good evening, everybody. This is Palash Endu Bhattacharya. I am managing the corporate business for Red Hat for India and South Asian market. And the good part is it's such an eminent panel. Some of them are very known to me already, and some of them I will get to know. And I think it would be a learning experience for me.
It is going to be for everyone, I think, because this whole industry is changing so rapidly.
Sure. Yeah.
And there's always something new every day, in fact. So let's begin. Thank you, everyone, for your introduction and for participating in this panel discussion. So our two key topics are customer experience and digital transformation. Fortunately, I think we have seen both of them come together. But in case they had come separately, it's a CX customer experience had come first, but without the tools of digital transformation, or digital transformation had come without that focus on customer experience, how do you think things would have been different? Yes, Amit.
Yeah, so I have a different perspective, Manoj, over here. Knowing that there will be no innovation without a need. And I have a slightly different perspective. The customer experience first came. And because to solve the customer experience is where the digital transformation or the digital experience started coming.
Okay.
So if you actually ask me, can digital transformation come earlier than the customer experience? The answer is no. There has to be an expectation, and to solve that expectation is where the digital experience started coming in.
Yeah, my opinion is not different from Amit, but just I want to expand that why it is so. In my mind, digital transformation is all about creating possibilities. And based on innovation, service innovations, product innovation, but keeping customer in the center of the universe. So when we are basically the customer is driving factor, and we are talking about the experience of customers.
Mm-hmm.
So digital transformation is the need of the hour. It is not something, a fancy thing we are trying to drive, and it is two parallel things. Customer experiences, customers' needs are driving the transformation, be it a digital or any other transformation.
Okay, thank you, Palash. And Saurabh?
Yeah, I agree with both the gentlemen. The one beyond the buzzword, right, of transformation, I would say there are two definitions. One is around customer. We treat the customer as internal and external, right? So I would believe that customer partners, which are our agency force, distribution force, bank assurance or other models, plus even employees. I think the experience is not the customer experience means all these three stakeholders.
Oh.
And the second angle is around transformation. See, beyond the buzzword, the customer experience is an outcome of many things that you need to get together and should perform in a sort of tandem together. So you may have a beautiful customer UI UX, right? If it does not perform because your core or API or any other layer is not working, I think that's where the disconnect comes. And some banks have gone through that experience in the past few years, which we all know about. So the what I'm saying is the Amit's point around customer experience, absolutely there has to be a need, but somewhere there is an iterative element in here on both of them.
Interesting. By any chance anyone has an opposing view? Let's hear that.
Yeah, I just wanted to add one more perspective, and sorry for interjecting this conversation. Is definitely there is a need, and because there is a need, there is a solve. Now, what happens is, because there is a need, there are a few organizations or few gentlemen, when once they identify the need, they don't even solve the need, but take the need to a next level, and that's where the innovation starts happening. So this is the perspective which I just wanted to add. Thanks.
Yes, that's right. Very right. Yes, Srinidhi.
Yeah. No, that's a good one, Amit. Yeah. So I just wanted to take it to the other perspective to this, right? So we all know, for example, that on the one side we have a lot of data, you have technology at the right place. Now we have all these algorithms that have all come together, to make digital transformation happen for organizations, right? So it's that idea whose time has come.
Mm-hmm.
But we generally miss the other perspective, where even the customer actually is going through a digital transformation, right? So if you look at all of us, right, we grew up in a world where there was no mobile phones, right? And then over a period of time we have adopted, and then our parents are still adopting, and so on and so forth. Whereas millennials are born to that, etc. Right? So as we customer also going through a digital transformation, right? And this digital transformation, all of us getting familiar with the social media, with the smartphone, etc., has led to a few critical trends, if you will, right, that were not there 10 years ago, right? For example, today loyalty does not mean anything whatsoever. Right? How many of you have both Swiggy and Zomato app on your phone? Right? How many of you have both Uber and Ola on your phone? Right? Yes. Probably all of us. Right? So loyalty does not mean anything. And similarly, attention spans are reducing. Right, and all of us are more and more comfortable, getting information from a Google rather than from the Doordarshan channel. Right, due to which there is very less information arbitrage, if at all. If there is anything that will spread in a matter of seconds or minutes. Right? Mm-hmm. Then, in such a world, how do organizations that are also having this data, technology, AI, etc., how do they differentiate? Right. So they have to differentiate on things that were not there in the past. So they have already differentiated themselves on branding, and distribution, on price, etc. Now, only thing that is left for them to compete on which they could hope to differentiate is customer experience, right? So that's why customer experience has become need of the hour, because customer is also going through a digital transformation.
Very good explanation. So it's not just customer experience that has randomly come up, but it is. Let's go on. So I think you got broadly agree and got good picture on this. Let me move on to my next question. Is digital transformation has resulted in several new applications being rolled out, obviously. Many of them are customer facing, many of them do a lot of data crunching. But as a business and technology leader in your organization, how do you choose between proven technologies and emerging technologies, or let me call them promising technologies, which have a promise but are not proven? And it's not just the technology, even the partners fall into two categories, proven or promising. So this matrix of proven and promising, IT companies and partners, how does it play out as you are rolling towards customer experience and digital transformation?
Let me take a stab at it. So essentially, I'll just go back and take this question takes me back 6-7 years. 2015, 2016, when we were all looking out for, okay, fine, how do we get benefited with RPA? RPA was a buzzword then. Mm-hmm. But so while you have a technology, and the technology was very fairly new in India. And when you scan the market, you figure out the partner network. Well, all the prominent players were in India. The partner network was still being set up. So then how do you take that leap of faith with someone who claims to have the best of the technology but doesn't have a partner to implement, and which also takes the cost of implementation to the next level, and are they willing to? So they had technology, they didn't have the use case. Now you as a business owner have a use case. So the how do you marry, the use case with the right technology? And that's where folks who were willing to come forward and take that leap of faith, that yes, this use case is something for which I'm willing to invest, or willing to do a POC, you know. So that's how I think it all began, as to, okay, find somebody who's willing to. I'm going to be with you, Anjana, with this. Let's try it out. Let's try this use case. Let's figure out where it takes up. What kind of impact does it make? And once you find somebody who's willing to walk the talk, along with you, that's where, for at least the new technologies and how. So it's not about more about promising technology. Technologies were promising. It's about the partners and how they take a position to participate in the journey is what mattered, at least.
So the journey is how you make it happen, and not
Yes.
just a static partner or a static technology.
Precisely.
That's interesting.
Yes.
Fantastic. And Saurabh, yes.
So Manoj, the way we look at, I'll make it completely agree with Anjana on the use cases. So as I said, right, as CIO, CTO plus the head of PNL, right, for my digital businesses, we did a small model. This is 15, 16. So we went around, we got all bunch of Indian startups, had a plug and play outpost, China in those days, everything. So finally we realized we modeled it into 3 buckets. Again, nothing fancy, but we said, run the business, transform the business, and continuously challenge the status quo as innovate. In the run bucket, which was my BAU, my appetite as a CIO, CTO, honestly, to take a risk, right? Because these are all enterprise, scale, size. We have 71 million and counting, right, in terms of number of unique customers. It was a huge bet. So there we went with proven technologies, proven partners. Proven partners with new technologies can challenge, and therefore they come into the transform bucket. So when we looked at our core, at that point, an insurance company taking a core policy admin on a cloud platform was still a very big deal, right? Even the regulator wasn't they were back and forth, but we did that. So what we said, run was one, proven, challenge with proven partners in the transform bucket. And then comes the innovate, so the RPA use case or our bot use case with Yellow Messenger.ai, right? Worked beautifully. Now the company, we are very happy that it has raised, Series B, Series C and all. But the scale at which we have scaled, and during COVID times, the adoption of a very simple bot, right? A bot is a bot is a bot. Everyone is a bot, right? But what we were happy about is the self-service capability, the adoption, which was 30-40%, went up to 80-90%. And it is still continuing. It came down a little bit, it's still continuing, which means those capabilities were wanting to be used by the end users, right? And I meant by end users, I mean even including employees, customers, partners, but it scaled up. So for us, on the third bucket was all the challenge, the status quo, all these new technologies, insurtechs, which can work with us. But I had the ability to say that here's business coming in, my own PNL, my own business, come in and say, let me just transform this because I have the ability to take that risk because it wasn't the use, it wasn't there before. So that's how we did, run, transform, and innovate as one
but
example.
Is that innovation piece now in the enterprise bucket, in the first bucket?
Yes.
The run bucket?
It does. It has. So from innovate, it went to transform. So we start something as POC, then there are very clear stage gates within the organization. And, it's not me, it is, it's a team which decides, of course, with very clear thresholds defined. From innovate, it goes to transform when there is a scale, when we scale it across all distribution channels, different stakeholders. And finally, it comes to run. The moment it comes to run, then it is BAU for us.
Okay, fantastic. That's a pretty neat way to divide it, simple and neat. So let's hear from Suchintan then.
Yeah, I couldn't agree more with Anjana and Saurabh, right? I think some of those points don't want to repeat, but it has to be use case centric, Manoj, right? Technology by itself has to be interpreted in the how relevant is it in terms of my business model, and how burning is the problem, right? I think these two questions need to be looked at before you decide, okay, do I look at tying up with somebody who's coming up with a disruptive idea? And like Saurav said, exactly, unless you're doing that, you are not challenging the status quo enough, right? So how do you bring in that champion challenger model in your entire technology partnership is something that we are seeing all our clients adopting, right? Just one additional thought here. Unless you are doing that, Manoj, what you are not doing is you are not expanding the customer experience bracket, right? Now, what do I mean by that? Going back to your first point, customer experience is not something static, right? If tomorrow the customer experience is being redefined by a grocery or a Q-commerce kind of company, I would also expect the same from my insurer, right? So it's a moving goalpost to that end, and unless you are expanding your partnership play to beyond your specific industry and the specific use cases, possibly you are missing out something, right? That's the only additional perspective, but completely agree with all the points made by Anjana and Saurav.
So as a consultant, you see most of the insurance players adopting similar models, dividing into 3 buckets, testing it out, working with proven partners.
Yes. May not be as structured as Saurav put it, but I think the whole idea is there are some stage gates in place, right? Because not every technology is a candidate for scale up. So there are some proven criteria of how do you move from incubation mode to a scale up and then possibly a run mode, right? So I think the thinking is exactly as Saurav articulated.
Yeah. And look, Manoj, I'll just add, see, it's a learning experience. I'm not saying that, we got it 100% right or we are not learning even now, right? But it is a journey. The goalpost keeps on shifting. As insurers, we have a lot of catching up also to do across all, both like GI and everywhere, right? So
what happens when some of your partners are not able to provide the scalability or security, some other aspect where you need to enter into that enterprise zone, into that production zone?
So again, as I can just start on this. See, it is the way I've seen is the partnership is very important. And by partnership, I use a word called ecosystem. See, it's again a very fancy word, right? But there's a concept of ecosystem. Any innovation that you do, you'll get into an ecosystem mode, wherein a partner, large or small, one, there has to be a trust, and second, there has to be a shared value. What I mean by shared value is very interesting, right? So it could be a startup, but they are trying to come in and disrupt a part of the value chain that you have defined that you have not been able to disrupt over a period of time, right? So therefore, the problem statement, the outcome, and what are the parameters in which you judge them has to be absolutely made clear from day one. And we have seen this work beautifully for us.
I agree. I cannot much, not disagree with what Saurav said. Co-creation is the mantra. So while the partner skin is in the game, and we also are, it's again, as I said earlier, it's a leap of faith, right? So while if at all, for whatever reason, if the partner is failing somewhere, even if it is the area of business understanding, it is, we put in our heart and soul to make it happen. It's not just his game. It's also trying to solutionize for the industry is how we look at it. So, how we can help the partner to, make it a solution which can be made easy to adopt. And hence,
solvable problems. You're saying that
the
problems that do arise are solvable. There's nothing unsurmountable.
There is nothing until unless it is something which is beyond, so you do give a breather to the partner so that.
Actually, the technology part is not the end of this customer experience or whatever we are talking about. Technology is one component. If I look at, there are a few other components, the people, process, technology, and the architecture you were talking about. So these are the 4, I would say, raw materials in other industries, relevance. So people part, we have to really, very, very have to be careful, because he was talking about shared visions. So basically the leadership comes in place. I mean, what actually, you want to do, that has to be shared, and that has to be owned by the entire people, right? And there, the communication barrier, many a times when the people are going through the transformation, the communication barrier comes in. Can I say it fearlessly? So that basically the leadership will become an important part. And here, being an open source company, Red Hat, we we see what is happening in this open source arena, right? Millions of people are contributing, millions of people are having their views. But when it is coming together, making these things ready for the enterprise, then the shared visions works, right? Then it is stepping in. So another interesting thing, maybe I don't know today, may not be able to get a time to discuss insourcing versus outsourcing, or new things going on, right? The way Ms. Rao or Amit can articulate what is needed and translate into technology. Being a technology partner, bridge the gap, right? So this is the second part, and then the architecture, the technology foundation, it has to be very, very solid. And obviously, once it is done, the operation part, how are you automating part, how are you creating a much bigger network and making something which is the flow is quite right, the integration is quite right. So that's something in the back end, the automation, the integration has to work on.
So yes, Suchintan, you want to add something?
Yeah, just one point, Manoj, while we're talking about the passion, I think one learning as consultants, right, on digital transformation engagements is where does the passion come together, right? I think one thing we have learned is the passion, the secret sauce to the passion is taking the business problem and the technology and helping it to articulate in terms of the end user's day in life, right? I mean, how is the end user's day in life going to be simplified? If you're an employee, how can you go home earlier? If you're a customer, how can you get your policy issued faster? Unless you make that translation done, the passion may be limited to certain pockets in the organization. That's the limited point I wanted.
Amit, can you add to that? Because your is also a health insurance company. What was your experience with COVID and claims and whatever else? And the learning.
Yeah. So I completely agree, and I want to just double up what Saurabh just expressed. But just to put perspective, Manoj, when I purely
fact, today, general insurance has got more than 40 covers. 40. You can imagine, like, and you can, the way to do that is to make it configurable, make it modular. You have to go back to the basics. And it also involves regulatory filing in many cases if you have to go on the retail platform, right? So you have to do that work, then you have to structure your core, and that's what we did.
Any other different kind of story on below the surface transformation?
I can talk of about the surface transformation because from a process perspective, again, I mean the point which was touched by Saurabh. So the whole focus with so much of data coming, so much of data, I mean so much of investment happening in data mining and deriving insights. If we don't relook at the journey, and at the decision points which are where I can define a moment of interaction to be delightful or frustrating. So at that point in time, or else, the focus has always been how do we personalize because now we have so much of data. The want was to know more, know more, know more. Now, when you know more about the customer, you know how he or she what he or she prefers, how they what are their choices. Now it's time to implement that right in the transactions in all your. So it's for us, it has been like re-looking at your entire processes, customer facing processes, and how do you plug in those insights so that either you personalize the experience or else you make it, you nudge the customer to take a decision. That is where we are focusing on, and that is also a challenge, because you already have a set of systems which have made your processes maybe, I mean, strongly coupled. Now over here you're trying to infuse something which is over and above.
And Srinidhi, do you have something to add about below the surface?
We basically we went to the features. Which are the features as a company? Which are the features that we want to differentiate on? From a customer experience perspective, and which are the features that we just have to reinvent just because the world is going there and we can't not afford to just be there, right? And the third one is okay, things that can wait, right? So divided into these three, right? For example, we prioritize, for example, WhatsApp experience as one of the most important, right? And the website experience. So that required us to work backwards to figure out how do you do the headless, which was not there in the past, right? And then work backwards to figure out, okay, among the 90%, what are those things that have to change to make the headless happen? And then things that are just we can just be there, it's okay, but we can't not afford to be there, but we're not competing on those features, right? And there we just did played the efficiency game where we went with the proven vendors, proven technologies, etc., so that we meet the bare minimum criteria. And the third set of things that could wait, right? So but all these were driven by the customer experience features that we want to go after and compete on.
So did all these newer insurtechs and fintechs help you in the below the surface, the underwater part?
So I was trying to link, being in the technology area for the last 24 years, I was trying to link how it is going on. So your three questions, if I connect all the three, one was promising versus proven.
Okay.
Second was CX versus DX.
Okay.
Or CX versus
underwater,
right?
Yeah.
And now the third question you put in, right? Old or the traditional applications, if I may say, traditional application versus the new things.
Right.
Once again, I let me give an analogy, and people here are more capable to explain it better or elaborate it better. So that is why this new age things will comes in, where people will build that. I think Saurabh has spoken about microservice based, containerized applications connected with APIs, and that is how it will be able to connect with multiple B2B, B2C, etc. Right? So once again, it is not either or. It is not either or, I believe, right? It has to be there, and we need to know how to create that hybrid model where the old and the new will coexist, and how the best of breed will come up. So the innovation can come when the promising thing will be accepted. And the
what is the success rate you're seeing? How much time and effort does it take? What kind of role does Deloitte play in kind of making the transformation happen? And what kind of transformation assistance do insurance companies come to you for?
Sure, sure. Thanks, Manoj, for that. So I think, yes, I mean, it's undeniable that there's a strong wind of transformation in the insurance industry, right? So whether you're talking about the core, whether you're talking about CX or some of the supporting applications, I mean, that transformation one can no longer deny, right? I mean, everybody is doing it. Maybe the reason is slightly different. Now,
Okay.
coming to your question of, I mean, what role do we play as consultants? I think Palash did allude to it earlier. I mean, we are the glue in the process, right? Let me put it very, very crudely. Starting from the vision of saying, why do we need to change, right? What is happening in the outside that's forcing us to change? What's happening in my industry to which I need to react? And more importantly, when I change, how should I make that change a little more future proof, right? What is the future out there? I think that envisioning is the first step where consultants like us come in, right? The second part of it is, okay, vision is great, but vision is only half the job, right? So what are the options out there in the market which can help you realize that vision? Maybe one solution, one technology, one platform by itself may not be able to do it. Therefore, what is that stack? What is that view that one needs to take in order to achieve that vision? So conceptualizing that is the second part. And the third part is, as implementation, as replatforming, or some of the newer innovative solutions kind of take shape, how do you keep the whole transformation true to the goals that you started with, right? It's very easy to get a little digressed, right? When you start getting into a project management mode, everything boils down to deadline and releases going live. Are you getting the promised business benefit that you started with? So that's the third bucket of roles that consultants like us play, I'd say, right? I mean,
Okay. And one of my questions was, what is in general your observation about the success of below underwater transformations?
sure.
Do they stretch out in terms of time or money, or mostly they get completed as planned?
Yeah, I mean, so I mean, to be politically incorrect, all projects suffer overruns, right? Whether it's cost or time. But I think my limited point as a consultant is, as we've been talking about above the line and below the line, or above the water, below the water transformation. It's not just technology, right? And I think again, Palash did refer to it upfront, right?
Great. Thank you so much. Friends, let's try to wrap up the discussion. We're running out of time. May I request each of you to give a one point that you think is going to be a very interesting feature in insurance in 2022?
No one will deny that this is a, this is a more a generic thing, data and insights. I'm not using ML or AI or any buzzword. I'm saying data and insights driving both the end customer behavior as well as the organizational behavior will be one big thing within insurance and across all our processes.
Okay, sounds good.
So, what we're seeing is that pretty much every company has the kind of data and the tools required to process this data these days. But I think what's going to differentiate the winners from others is, as an organization and as a leadership, right? Are you able to ask the right, by the person?
data driven. So what I understand from it, the data is getting generated all over the places, from edge to core. How we are going closer to the data, how are we making more sense to the data, and how intelligently we are using it to benefit our customer, to benefit the organization we are working for. So I believe that would be the key in this coming year. And as an industry,
Thank you all for sharing that new perspective on Insurance Next. Thank you all. Thank you very much.
Thank you.
Thank you, everyone. Thank you.
A very good morning to you, ladies and gentlemen, once again. We are privileged to have our partner for this particular evening, Intellect, which is going to present some very, very deep insights about how the insurance industry is taking up the digital transformation. The presentation is called as Digital Modernization and Insurance Landscape, and we are privileged to have Hitesh Arora, who is the EVP and Business Lead APAC of Intellect Design. Hitesh, welcome to InsureNext. We look forward to hear some insights from you. Thank you.
Good morning, good afternoon, everyone. Let me begin with wishing you all a very happy new year. The last 2 years have been really challenging for the industry and tough one. However, I think the industry has found new ways of carrying out business, and mostly the business has been carried out through a digital transformation by adopting the digital way of working as new norm. My name is Hitesh, and I'm business head for insurance at Intellect Design, and today would be covering some of these aspects of this new normal and how the industry is responding to the same. At this point of time, I would also like to thank you all for attending to this event. The focus of my talk over the next 10 minutes would be what patterns we are seeing is changing in the industry. And I picked up the top 5. The biggest one, which is impacting the industry largely, and this is not insurance, but also the financial services, and insurance is part of it, is Open API. And I will be covering all these in subsequent slides. One of the biggest one is that over the last few years, we thought that fintech would be, or insurtech would be challenging the industry, but they are now becoming part of the ecosystem. Data, we all know, is the new oil, and we all are focusing on how to leverage this data for better information and business results. It's all about customer experience, and the focus has been more and more larger, specifically looking into the pandemic and looking into the aspect that customers are now digitally touching various assets of the organization. Cloud is the future. Cloud would be a part of the strategy for all of you, and hence enablement of how do you leverage cloud has been the focus. Coming to open APIs, while we have seen banks have been really growing at a much larger pace, and they're adopting the open API ecosystem hands-on. However, insurance is still lagging. While there has been a growth over the last few years, and these growths are, on double digits to a larger perspective. However, still insurance is still catching up, and that will certainly lead to an open insurance space, which is going to be the future. It's all going to be focused around how do you bring collaboration, how do you bring potential fraud prevention, and of course bring in healthy analytics across the organization. Largely in insurance sector, open APIs have been focused around customer. It's about distribution management. It's about how do you acquire, how do you really distribute your products, while on the other hand, the policy admin servicing, claims or back office processing, underwriting, marketing, and other areas are still lagging but catching up much faster. Coming to the second pattern, fintech. While it was a booming time a few years ago, and it's still we see insurtechs or fintechs coming up with some new thoughts and new energy. And at one point of time, we thought that they're going to challenge the industry. However, over a period of time, they're settling down to be part of the ecosystem, and larger players are trying to imbibe or trying to leverage their capabilities or try to bring this ecosystem together to really serve and create a differentiated customer experience. Here is another sample of larger ecosystems which is coming into place, where the whole fintech and insurtech are coming together to create a one ecosystem of of serving the customer. Data is new oil; it's growing at much faster pace. Still, I personally believe 80% of data is still lying in part of documents or in part of sources which are completely unstructured. Over the next few years, that unstructured sources of data would certainly be tapped and certainly be brought in the main ecosystem, and that will see an exponential growth around data and how do you really manage this data more smartly. As I said at the beginning, customer is the focal point. Customer experience is paramount importance to all of us today, because in today's time, specifically looking to the last 2 years, the physical interactions with the customers or prospects are decreasing. Customer and prospects are more coming onto our digital channels, are more coming to virtual channels and really experiencing us and giving us a lot of insight as to how do we really improve upon, where do we lag, and where do we need to focus on to really bring the whole ecosystem journey of customers more smooth, more at ease, and more seamless. Cloud, as I said, is the focus. Organizations globally are adopting to clouds with more open arms. The concerns around security and threats are being really pulled in and plugged in by the cloud service providers, and hence more and more confidence is coming in. Some of the organizations when I meet have actually moved their core systems out to the cloud while some are catching up. So when we meet the CXOs across the insurance industry, what do we hear? We hear their focus is more on digital transformation. We see their focus is more around customer experience. We see their focus is more around how do they really make their customer engagements more seamless. But that is bringing in a focus inward as to how do we really remove friction within the ecosystem. Because technologies are different, platforms may be different, and hence there could be a challenge in that particular perspective. How do we really bring design studios or on-the-fly changes capability through studio mechanism or through some kind of low-code mechanism? That is another area which is under the focus for the CXOs. Multi-channel, omni-channel, whatever you want to call it, omni-digital is one of the focus areas for certainly for the CXOs. Insurance, how do we really create, customer journeys which are seamless, which work, without any interruptions and can really make an end-to-end, policy issuance servicing, on the fly. And channels reduce the, pressure upon, there's another focus around, can you bring a larger ecosystem and can you increase this ecosystem by bringing some satellite solutions which can reduce the load on the core and take the experience part out to a much mature systems. Omni-channel, omni-digital is one thing which we have talked about. And hence, what are we, what are we hearing? What are we seeing that amid this, within this disruption, across the value chain, what are we seeing across the initiatives being taken up? Some organizations are picking up new age technologies. Their focus, as I said, is improving upon customer experience. Renewed, importance is around on data security. Of course, one of the biggest areas which I've been talking about is how do you really bring collaboration between FIs and insurtechs and insurance companies and banks and the whole ecosystem bringing together so that whole transaction flow can happen seamlessly, optimizing backend process and a whole lot of activity which is happening. However, what we are sensing is that while there are a lot of focus on this end, but CXOs are a little worried about the concern that they still have that legacy system, and insurance has tons of legacy systems which are there. How do we really, which are connected point to point, which and their deployment architecture is limiting them to really go on this aggressive path of digital transformation, or at least limiting their capabilities to really get into this composable solution of business architecture. And hence we step in. What do intellect can bring in on table for organizations like yourself? While we have multiple assets which we can bring in and leverage upon, I want to touch upon 5 key assets today. Focus upon customer experience. You can sell, engage anytime, anywhere. We have a solution called contextual business experience for insurance. We certainly like to talk about more about it to life insurance and other organizations for surely. We have robust claims platform, which is an end-to-end claims platform, which certainly focus upon leveraging claims experience, which is the moment of truth. We do have a new age, a late, cognitive technology-driven talk to API platform, which is in the space of intelligent automation through intelligent document processing. You can capture, enrich, and process, your unstructured sources of documents seamlessly at any point of time. You can reimagine your customer onboarding journey. We have many assets in that place, which we bring together to a straight-through processing and enable through our AI and NLP processing, which will bring more intelligence and more smarter underwriting to you guys. And then we have for non-life, and this is specifically for non-life customers, we have next generation, underwriting, smart underwriting desktop, which is Exponent, which is completely AI enabled powered. We call it Underwriters AI Workbench. And towards the end, to really handle your, or to manage your disparate or legacy systems, and how do you really do progressive modernization, we have a solution called iTurmeric, which can enable your integration orchestration across the ecosystem within and with outside world at a seamless manner in a low code mechanism. So these 5 offerings certainly will enable insurance organizations like yourselves to become composable business and work towards a true digital transformation. We truly welcome you to experience Intellect, and I certainly look forward to engaging with you. Wishing you a great event today. Have a great day. Be safe, stay safe, and we'll be surely in touch. Thank you.
Thank you very much, Hitesh, for a wonderful session. It was really very, very thought-provoking, and we really look forward to some wonderful contributions from Intellect Design into the shaping of digital transformation in the insurance sector. Thank you. Hello and welcome to the HR session at INSURENXT. Nurturing people is one of the most important activities in any organization. Like I was listening once to Mr. Narayan Murthy's session, where he said that if you want to nurture things for one day, grow flowers. If you want to nurture people for few months, grow plants. If you want to nurture things for the future for about 20, 30 years, grow trees. And if you want to nurture the society around you forever, nurture people. And I'm really honored to have a set of luminaries with me who are nurturing people all over. And I would like to welcome each one of these luminaries here to this first session on HR at INSURENEXT Summit and Awards 2022. Ladies and gentlemen, I have very wonderful set of star luminaries here from the insurance sector who have joined me to share their thoughts. I have one general insurer, 4 life insurers, and I have 2 interesting practitioners in this session. I would like each one of them to introduce themselves. Priya, can you please take the mantle and introduce yourself to the audience, please?
Thank you, Babu, and hello everybody. My name is Priya Vasudevan. I am the CHRO at Liberty General Insurance. As Babu said, I am one of the general insurers on this panel. Extremely happy and looking forward to this discussion, and happy to be part of the August panel and amongst the August audience.
Thank you so much, Priya. May I request Ruchira also to please share your introduction, please.
Thank you, Babu. Very happy to be here, and thank you for the opportunity. I am Ruchira Bharadwaj, everybody. A very good afternoon to you. I am the CHRO at Kotak Life Insurance.
Wonderful. Welcome, Ruchira. Welcome, Priya. May I request Mr. Vishwesh Kulkarni to introduce yourself, please.
Good afternoon to all. I'm Vishwesh Kulkarni. I head the organization called Yashasvi Academy for Skills. We are basically the skill development company, and we are the largest third-party aggregator for providing the apprenticeship program. I am also national president for National Institute of Personnel Management, that is NIPM. Thank you so much, Mr. Babu, for this opportunity.
Welcome, Mr. Kulkarni. May I request Praveen to please share your introduction, please?
Thank you, Babu. Good afternoon to everybody. This is Praveen Menon. I head HR at India First Life Insurance, and I'm responsible for people. It's going to be an enriching and exciting session for me, I guess. I'd be able to possibly contribute and learn from each of the August panel members. Thank you so much, Babu.
Wonderful. Welcome, Praveen. May I request Prakhar also to kindly introduce yourself?
Good afternoon, everyone. Glad to be in the August company. And thanks to Banking Frontier for organizing this. My name is Prakhar, and I am a director at Deloitte Consulting India.
Wonderful. Welcome, Prakhar. And I would also like Shweta to kindly introduce yourself, please, Shweta.
Thank you, Babu. Good afternoon, all. I'm Shweta. I head HR for Future Generali Life Insurance. Really excited and glad to be here, and looking forward to an engaging session. Thank you.
Excellent. I am also very privileged. This is one of the most gender inclusion kind of panel we have. We have at least 3 ladies, unlike in most of the panels where we are very, very male heavy, but this is really a very interesting and a balanced session. So we look forward to a lot of interesting thoughts from all of you. So my first question goes here. With the entry of InsurTech, RegTech, and technology grade gathering a strong pace, it is challenging for HR heads to equip organizations with competent HR resources to take up the tech-savvy mantle. How have organizations working on the reskilling part here? If Ruchira, you have been working in the life insurance space, how can you share some perspective on how you are equipping your teams?
Sure, Babu. I find there is deeply exciting work that is happening currently, and that is a very exciting phase for the HR professionals. Firstly, after many years, the leadership, employees, everybody included, are really focusing on upskilling and reskilling. And that's half the battle won. So the answer to the first part of your question, is it challenging? I think not anymore. At Kotak, we have a 3-pronged approach. One is upskilling of the HR through external resources. And these are highly customized, best-in-class training focus on newer skill, whether it is managing ambiguity, whether it is really designing new programs for the differentiated needs that the customers, which is internal customers, have, whether it is about tech, whether it is about digital, whether it is about data. So that's really the upskilling piece. That is part one. The second piece, what we have done, Babu, is on-the-job projects. Almost, I think 50% of my team members are constantly working on new initiatives, new projects, and these are really about designing processes which are going to make life easier and simpler for our employees. creating a digital framework, or whether it is about understanding data in a much more meaningful way, and really driving next gen tech processes and initiatives. So that's the second thing that we're doing. And the third piece, and the last but not the least, is really the mindsets. I find that's the most interesting part. Everyone is not always in the team is exhilarated by the change in the work, or especially the changing paradigms of the nature of work that has happened post the pandemic. But once I have realized, once you expose them to how the world is steering towards and what are the new things that other companies might be doing in the HR space, I have seen there are early adopters, early enthusiasts, and then they really champion the cause of really settling in, learning more, learning fast, and driving the change.
Interesting.
Thanks, Babu.
Interesting. And with innovations happening, with technology at such a great pace, learning fast, implementing it fast, failing fast, and then relearning fast and doing it fast is also very important.
Absolutely.
I think that's a very, very interesting way in which you have been doing. Prakhar, you have been working as a practitioner from the consulting space. How have you been seeing organizations working into, transforming themselves, especially in this technology-driven space?
Sure. So, Babu, I'll try and keep this answer pertinent to insurance as a sector. Now, long story short, technology talent isn't indigenous to insurance. If you think about from the advent of when the insurance companies started coming up in India, they were not the first or the second choice or option when they started looking for an employer. And therefore, you never had the best of tech talent join insurance companies. Even to that extent, most of the big banks and bigger financial enterprises have struggled to get tech talent. And that continues to be the challenge even today. However, primarily from an insurance perspective, very dispassionately, there are only 3 players today which are pure play insurtechs, right? Everyone else has, to a certain extent, in certain part of the value chain, used or leveraged a lot of technology, be it underwriting, be it claim processing, be it the way the entire agency management and distribution is done. Now, across all these value chains, you will have different kind of tech talent which is asked for or which is looked for. And I'm trying not to answer just the tech part in HR, but overall tech part in insurance. 3 things have to change, and 3 things where insurers have successfully done changes and have yielded the benefits. One is, how do you develop the ecosystem where you can absorb the tech talent? Tech talent, like any other talent, would fundamentally look for what's in it for me. From a career perspective, from a learning perspective, and the tangible output what an employee gets out of an employment. The very first part of what's in it for me is the career growth. For a typical tech talent, it's a very specialist career trajectory, right? So where can he go from a time he comes into an insurance company, and what's his career trajectory? If that can be defined, really helps. That traditional tech talent is very clearly visible in a product or a services-led core tech company. Not so much in FS. Companies which have been able to do it have actually been able to leverage it a lot, have been able to attract talent. Second, the way you structure the entire benefit package for them. And when I say benefit, I use it in the larger gamut of compensation, the periphery benefits, the non-tangibles, the flexi part of benefits, and all of that. That kind of talent is used to, given the age group that they represent, is used to getting the benefits in a certain manner and a flexibility associated with that. That's the easier part because you can still structure it in a certain manner. But the most important part is the ecosystem. When the tech talent comes in, it expects a certain career. It also expects a certain kind of hand-holding. If insurers and employers can give both of those things, it tends to go a long way. Creating a career hierarchy amidst a bunch of well-defined, well-thought-through, segmented jobs in insurance for a different tech vertical seems to be a challenge with most insurers grapple with. But if that is solved for, it tends to create a good, it tends to be attractive for tech talent as well.
Interesting. So one very important thing that we have seen in this recent times is that there has been a shift from just once upon a time, which was a very agency-heavy, agency-savvy business, to that of getting into multi-channel. Now the digital channel is taking a lot of importance in the channel, in the entire business, and not only just digital, but a whole lot of other channels are also growing up for the organization. Now, how has been talent transformation also keeping pace with it? So in this entire thing, how are the leaders in human resources equipping their talent accordingly? I can request Praveen to probably start off with how he sees this transformation happening.
Sure. Thank you, Babu. As rightly mentioned by you, Babu, if you see various alternates in terms of doing business that exist today, it's actually completely changed the entire ball game, how especially in the life insurance industry the business is done. Today we are talking about not only agency or a bank assurance model, but we are also talking about things like micro, things like digital, things like strategic alliance. India, any which ways, is a very underpenetrated country. It's a sunrise industry. So the life insurance industry is expected to do well through these channels of business, at least for next half a decade. Now, when we talk about things like a strategic alliances, the industry or the company is actually co-partnering with, let's assume, a firm or an industry which has got possibly nothing to do with insurance, right? So the thought process is that, okay, if you are going to co-partner with an industry which has got nothing to do with insurance, how is your product sustainable for that industry also to accept insurance as a part of their product portfolio? If you'd have heard in the past, in let's say in Western countries, you travel in an Uber, there is an insurance for, when you enter, the Uber till the destination, there is a insurance cover given to the customer in case if the customer prefers to, choose one. And the question is, so the travel time would be 30 minutes or a 1 hour, and you are actually covered for that period. So the insurance company actually has to go back and completely personalize this and provide with a product which is, up there, so that an industry which has got, as I mentioned, nothing to do with insurance, also in some way gets tied in to the product itself. Now, if you have to do something like that, you need talent who can actually think through this entire stuff, right? It is not only tech enabled, it is process, it is regulatory, it is compliance, it is margins that you can make out of it. All of those things comes into the picture. And next half a decade, you would see that, especially in life insurance, these things actually going to a different, phase altogether, because, Prakhar mentioned that technology is something which every company is actually looking forward to inculcate as a part of their ecosystem. And when a technology is available for you to make a product which is agile, then the sky is the limit. And, the agility in terms of people to understand that possibly today there is no demand, but the demand is certainly going to come in future, or you create a demand, is something that would be sought after as a skill, as a thought process amongst the employees. And I think organizations are consciously trying to build it in, if the employees are already there, or trying to kind of recruit people who understand these aspects and partner with the business in this journey, which is something which possibly Indian sector has not really seen very much till now.
Interesting. In fact, we cannot even compare anything closer to some of those developed countries, where in a country like USA, there are about 5,500 insurance companies. Okay. And in all over India, a little bit what I am understand, correct me if I am wrong, we have hardly about 400 actuaries in the country. Okay. So if you look at that kind of numbers, we are nowhere there in spite of having a huge population. So definitely we are sitting on a gold mine of insurance explosion, which can happen if we all put our hands together and try to take it to the desired levels. So definitely the dearth of talent is one of the most important thing that is going to hit us, and we need to keep preparing for that. And I agree with how you have been explaining about the Uber kind of examples. A lot more such kind of examples are there in the industry today as well. Mr. Vishwas, you have been working towards skilling the people in the insurance sector and trying to see how new talents can get into, especially with this hybrid insurance capability. The requirement of people getting into the sector is growing. How do you see this problem getting solved, not only by the industry itself? How can external skill development bodies come together to get these things done for the sector?
I think I am not still able to understand why this insurance sector is not related with the academics. There is no specialized program, at least I have seen. There might be in India somewhere, but I have not seen some popular program in this sector. We have come across with the MBA in the health management, hospitality, and lot of specialized program. In Pune University, we have a trekking also as a management program for that matter. But insurance being a huge sector, and particularly after this COVID-19, I think every family is thinking about this insurance. So such a growing sector, unfortunately, neither we have any program at the graduation level, nor we have any program at the management level. At least we should have something for the back office. We should have something for the front office. Till today, as a consumer, when I see this insurance industry, we always feel that there are certain marketing people who just sell these policies. And this is called a so-called very insecure job, because if you are not able to do the marketing, you are out. So I think that age-old image of this insurance sector is still today with the, at least at large in the public, since these all are the HR stalwarts from the insurance industry, they might have different opinion. I'm just sharing from this as a consumer or a third party or as an outsider, what is the image about this insurance sector. I think that need to be somewhere. These all insurance industry should come together, have a specific dedicated program for the insurance. Like, for example, we are working in the apprenticeship sector at large in India. We are coming with the concept of a graduate apprenticeship program. So degree-based apprenticeship program, we call it. So can this insurance sector can come together? We can develop some BBA program, Bachelor of Administration, for this specific insurance sector for the 3 years, so that person can work in the insurance sector, whatever back office, financial analyst, or whatever the marketing is there. He will be treated as an apprentice, so no label or no statutory will be there. And then we can impart him this graduation program for the specific for the insurance sector. We can take some graduate people, we can engage them for the post-graduation part of it for the MBA with the various universities. Even we can go for this open university also for that matter, and do this pan-India program. So I think that is need, because after this COVID-19, I particularly seen that every family is definitely thinking for this insurance, a huge sector, huge potential. And I think that requires the pipeline of this talent and focused talent on this. So I think my suggestion to this, all these stalwarts are, this is a need of an hour. And apart from that, this National Skill Development Corporation already having the banking finance sector, where there are a lot of programs, basically, even in the insurance sector are there, can be definitely considered and given this kind of a certification to the existing manpower also. So they can also get in-depth knowledge of this theoretical part also, apart from this day-to-day operational part. Thanks.
Wonderful. In fact, the banking sector has taken always a leap ahead in getting association with the Manipal Institute or with various other. Symbiosis or has its banking course, NMIMS has a banking course. And why can't we as an industry in the insurance sector, which is also a really big demand in the market, have a specific course and create a future talent pipeline? Very interesting thoughts, sir. I think there is a definite scope for these kind of interesting skill building for the future. Let us now get into the InsurTech and new sectors that are coming in. Obviously, with InsurTech, RegTech, and all this technology savvy sector coming into picture, ultimately anything focused on the insurance sector is going to definitely hook up the talent from the industry. At the same time, the insurance sector itself also faces a lot of attrition on one side, especially from the sales angle. I'm sure all of you will agree when it comes to the attrition ratios. So how are we going to ensure that is there a shortage of talent being perceived in the near future? And if so, how are organizations working on ensuring A, a steady pipeline on one side, and B, on nurturing the existing talent and withstanding the competition in this sector? Priya, I would like you to share some thoughts and perspectives on that.
So thank you, Babu, for that question. It's quite an interesting and future-looking question. And, I like the word you used earlier about there is an insurance explosion, which is like we are on the edge of it, that is about to happen. I completely agree with that. And the positive side of that is all these players, the InsurTech and other players coming in. So I would consider, I would not look at it as a threat. I would look at it as an opportunity. I mean, it's a good thing that this is happening. It's creating more jobs. And somewhere as an HR professional, I feel it's the moment of employee, the moment for the employee to be in the spotlight, and all good things come after that. So coming back to organizations, I think the strategy of most organizations, including Liberty, what we are doing is actually working around three pillars, so to say. The first pillar is attracting talent from fresh talent pools. So I completely agree with what Mr. Kulkarni said, and this is one of my learning from this panel, is that how about looking at apprentices for as a steady pipeline into future employment. We have been and we continue to hire management trainees, freshers. So that becomes, of course, a good chunk. The other chunk, and this I'm more talking about the feet on street kind of hiring. But there is also a dearth of talent and this kind of land grab happening in the mid levels as well. So how do we protect and create a steady flow for that talent? And here is where I feel, I mean, we need to think a little differently. I'm still at it, but I don't say that I'm very successful yet. It's about looking at other sectors, looking at hiring from other sectors at the mid-level. We tend to hire, employees from other sectors at the junior level, but how about at the mid-level? And right now, the lack in the sector is of managerial leadership talent. So can we hire from stable and older sectors, like, say, pharmaceuticals? For example, and that's a very attractive, that's a sector with a lot of very attractive, ready, talent, so to say, anchored in values and things like that an employer would prefer. The second piece to this is how do we retain? So if there are holes in the bucket, the more you hire, and you're losing still talent, so it doesn't help the cause. So how do you retain, especially the key talent? And while compensation is a lever and it will continue to be, I feel the employee or the key talent of today is much more concerned about careers, much more concerned about the work culture than earlier. So are we providing courageous movements to our key talent? Are we enabling those movements? So this is something that we are working at Liberty to enable these movements. And then are we providing the ecosystem that will support those movements, make these key talents successful in that in that new role? So as the talent sees that my career is progressing, if not vertically, there is lateral movement, I'm growing. If he or she feels a sense of buoyancy, and that's when, I mean, I've seen many of my key talents saying no to such lucrative opportunities, which just come with a compensation hook. So that is the second pillar, the retention part. And third one, which I can't emphasize enough, and I think Ruchira touched on this, is how do we change the mindset of the managers and leaders? So basically changing the whole ecosystem in terms of, and primarily the mindset, being open to hiring talent from other sectors, being open to nurturing talent. So it's the easiest thing to do is to work with ready now talent, because I mean, it requires little effort. They start producing immediately. But how do we grow the managers and leaders to be, let's say, coaches, to be mentors, to grow the talent, to hold steady, not lose patience. 1 month doesn't go too well, and the next month we are questioning why did we even hire the person. So those kind of conversations are actually disablers. So the ecosystem needs to get ready to to deal with this. I would say this insurance explosion that is about to happen.
Wonderful. Wonderful. In fact, creating a dream in which the employee himself can see his dream. the dream of the organization in which the employee himself can find himself as a part of the dream is one of the most interesting and enrolling ways for probably retaining that talent to work with you throughout the uh, career of the employee. So this is a very interesting thing that you have shared, and of course, looking outside the sector, I think that is another very interesting thought that you have put across. That is something many banking sector employees have HR heads have been looking at retail for that matter, because retail has gone out of the box to do that thinking. Great. I like some of the wonderful thoughts that you have put in. And now let me move on to a practitioner like Prakhar, who has been seeing this activity where the insurers have been looking at trying to think out of the box solution. Prakhar, what has been your observation on out of the box solutions for these kind of strategies required?
Um, sure, Babu. Is this again for technology talent?
No, not just technology. I'm speaking for overall, because the entire organizations are looking at getting into the talent from different sectors, and the technology sector is not just taking a tech talent away. He is also taking your underwriting talent, your claims talent, or anything else.
No,
So,
fair.
how are you looking at maintaining the balance, or how can you maintain the balance?
See, there are very interesting things which got discussed in the panel. Mr. Kulkarni picked up the whole point of look at potentially other channels where you're not looking for talent, right? And he specifically meant academia and focus tie-ups. Praveen used a very interesting term called agile, and it's important to understand when he said agile, and probably his thought process was also trying to talk about the fact that in a industry which can change itself through technology, there's a lot to be unearthed. We need to stop looking at jobs and look at it as a continuum of skills, right? It's a continuum, because as the dynamics changed 2 years back, a lot of skills which today are look at everything that people are doing as a continuum of skills. Second, Priya touched upon the point. In the work environment, we are flexing everything from nothing which was flexible 2 years back. Now everyone is trying to change everything and make everything flexible. The most important part is to create our managers and create that ecosystem for them to understand how to work in a hybrid culture, get in that mindset change. That's what Priya spoke about. And finally, I think very often, not just in insurance, everywhere we work with clients, we realize there is the whole predictive bit gets abused a lot. So get into the implementation mode to check, validate, and it's called quick testing hypothesis and implementing it, rather than doing a lot of analysis paralysis, which basically also means that rather than trying to do predictive attrition, try and understand where attrition has caused the most value deterioration, right? So amongst every department that you have in your company, look at where most value has been eroded because of attrition, right? Which also in a way would tell you where institutional knowledge is the most important aspect, where it is very difficult to replenish that information in a short cycle time. That in a way can be used when you're doing your staffing the next time, when you're planning for your manpower the next time, when you're trying to get in efficiency parameters. So those are the things in a nutshell, three broad parameters. Uh, Trying to look at skills and not just jobs, because most of the time, look at HR. Some of the biggest names in insurance today deliberately don't hire people from insurance background or rather banking background, and they hire people because HR is a skill, right? It may be a job today in insurance, but do you necessarily need someone who has done insurance in the past to come and do it in another insurance company? No, you don't. It's a skill. How many functions can replicate that model, right? Second, as I said, get into fast testing hypothesis and implementing it, fail the failure first concept, rather than continue to analysis paralyze the whole bit of whether what is predictive, what is not predictive. And the final bit is flexi arrangement will work if we train our managers on how to handle teams in a virtual environment. So bring in that mindset change.
Fantastic. So now we have last 10 minutes left. I want to go first to Shweta on this. Shweta, which are the sectors in which you as an HR professional envy as a great sector which manages talent and where you will probably like to fish your talent from, or probably nurture your talent from, according to you?
Sure. Babu, I think all of us are today sitting in that envious position because the entire oasis of talent is open for us. The fact that HR practitioners here today and business stakeholders are talking about looking talent. Let me just take a very simple example, right? Look at the robust trainee to executive model that a manufacturing setup has created. They hire graduate trainees year on year, and we've seen several successful people rising the ranks from there and taking on the mantles of being executives in those firms. Same goes for a pharmaceutical industry. Same goes for a banking industry. But I think in the private insurance sector, we still don't have a CEO or a COO who started their career as a salesperson in an insurance organization. I think we are yet to see that shift to happen. And the fact that all of us are today talking about, and the mind space that has got created for us, we're talking about opening up the talent for other sectors to also participate and for us to also go and hire talent from other sectors, I think is absolutely welcoming. I don't see this stopping here. I think, like I said, the entire oasis of talent is available for us. And progressive insurers such as Future Generali and several others here are looking at making the best and getting the best person in rather than getting the most trained person.
Interesting. And how are you thinking about, for example, the rewarding strategies there? Okay. That is one of the most important magnet to attract the people as well, adopted by the HR managers. So how have you been working on it?
So I don't think we've seen a lot of innovative reward practices, if I can use that word, being deployed by the insurance sector. I think all of us in the room are to blame for it for a large extent. But I think there's interesting thoughts that have started. One small example that I've been now discussing, right? To say, can I create a value proposition for a sales manager who's coming into my organization for him or her to see that it's not just the here and now. It is not what you will bring in the business for today or for this year that I will reward you, but you participating in the AUM creation of the organization, right? So giving that person a line of sight and rewarding back in some ways and means for them to look at the long-term association, right? I think, and Prakhar used a very good example to say that it's not a job, but really for people to start looking at this as a career choice. I think we are at it. Most of us are talking about innovative reward practices, but yes, we have an ecosystem to also convince to have those reward practices to be put to use in our organizations. But I'm sure we'll get at it.
Interesting. Great. That's a very good thought, Shweta. Before I go to the last question, I have a lot of interesting ladies in this part of the panel, and I want to ask all three of them. You have all gone through this phase of taking a sabbatical, and there are a lot of times when you could not give 100% to the jobs, and there is a lot of hidden talent today in the industry which is not doing its full-fledged work of 100%, and they are raring to go. And when they want to come back to work, there again is a issue because they have lost years of experiences. How are HR professionals actually looking at digging into this talent pool and see how you can use this talent, especially with work from home and other possibilities in this? Ruchira, would you like to take up some thoughts on this?
Sure. Very interesting and extremely pertinent question, Babu. I feel there is a gap in every aspect of the life insurance ecosystem. And I have almost never seen a product which is designed for women. I have seen, I think it stems from a very deep-rooted bias that insurance is for the main earner of the household. So the industry's conventional wisdom on choosing a plan is to multiply your current earning, and which further devalues the impact of a spouse who has a lower salary or who is a stay-at-home parent. when I see ads, I see they talk about the man who has to protect the family, and the woman and the child can only be saved by a life insurance product that the man has invested in. So in Kotak Life, what we have been doing, I would say 4 things, and I will break it into the aspects that we are doing for frontline, for mid-level, and obviously at the top level also, and some very interesting initiatives that are at a very nascent stage. So at the frontline level, we have kept a target for some hiring women colleagues, and I'm very proud to state that almost 45% of the people who we hire, especially the GTs and the MTs, are women. And there's a huge amount of focus that goes into seeing that there's an investment in making their career very meaningful, and so that they stay put. At the mid-level, what we have done is we have identified women who have high potential, and they're being mentored by women at the leadership positions. And it's really a one-on-one skilling and mentoring program that is happening, which is on career progression, life skills, and really making a difference in the organization. Now, why I'm talking about this is because this is the workforce which really goes out, right? They go on sabbatical. They take a break because they have to support an ailing parent, or they have to support their spouse's career. So why I'm focusing on this is because once you say that this is a workforce that is going to continue with us and going to make a very meaningful impact with us, we really need to have hire them, nurture them, and see that the ecosystem is provided to them so that they continue to work for us. Now, for whichever reason, we choose that they are not going to be part of the organization because of, again, there are so many other imperatives that come into the focus. And so for that, and that's something that we have started very recently, and it's a very interesting work that has happened. In fact, something that we had done, Shweta and I had done in the previous organization also, is that develop a proposition for such talent or the workforce, both internally as well as to attract the ones who are outside of the organization. So every lady employee who has shown an inclination to quit the workforce because of certain challenges, we counsel them, we guide them to take a temporary sabbatical, and or also maybe continue to work on a part-time contract which suits their temporary needs. Economist study that got published last year that almost 7% of women workforce have fallen out, and urban workforce has fallen out of working, right? And that's something that we want to protect. So that's for the people who are with us. And also for our colleagues who are taking a break during the maternity phase, we reach out to the alternate workforce that you're talking about, Babu, to join us for that particular role. It serves 2 purposes. If by chance the permanent woman colleague takes a decision to stay away, we might have a ready replacement available. And it also provides the lady who has gone on maternity leave to come back to the workforce in a gradual manner. There's no pressure for her to really come back quickly and saying, oh, my 6 months of maternity leave is over and somebody is really breathing down my neck to come back to work. So those are the ways we are trying to protect the people who are, as I said, attract, nurture, guide them, counsel them so that they continue to build a career with Kotak Life. And also in cases they have to take a sabbatical, we really again counsel and guide them saying how they can really continue to work with us on a part-time basis and also fill those positions with these alternate workforce who are out there.
Great. Thanks a lot, Ruchira. That was quite a very exhaustive kind of understanding about how you have been working into this. Any other team member want to share for just 1 minute any other experiences than what Ruchira has shared, which you have nurtured in the past in this area?
So maybe just in maybe few seconds, I want to share. It's very important for the women and forming community groups. So at Liberty, we have something we call the VERG. V stands for Women Employees, and ERG is the Employee Resource Group. So we have found employee resource groups are very helpful in attracting and also retaining and making the women included. And the other concept is men as allies. And both these are areas that we are working on with very, very good outcomes.
Interesting.
So it's not about men versus women, but it's men and women.
This is like, when I say to my kids, save girl child or something like that. So my boy comes up and says, save boy child also. Why only a girl child? So that is the kind of approach. So we have to be neutral as well. So great.
Babu, just one addition to what Ruchira and Priya mentioned. What we have done at India First Life is that we have a policy of providing a replacement temporary hire in case if any women is actually going on maternity. Now, what used to happen is the fact that at times, whether we like it or not, there is a prejudice in terms of hiring women. And the moment we say that don't worry about the headcount, you will be provided with an additional headcount for the period that women is on a maternity leave. The thought process was that the entire hiring processes mindset completely gets changed to begin with. And that is something which I thought that I'll add as a pointer here in terms of we promoting and changing the mindset of making sure that everything is even and everybody gets a level playing field.
Fantastic. We have 5 more minutes to go, and I don't want to waste this time, especially into any other things, but let's do some future ball gazing. Crystal ball gazing rather into the future of the HR resources. So Priya, why don't you take your shot for about another 30 to 45 seconds on what you think?
So I would not limit myself to just HR resources, but your question is around future of work and what organizations need to do. And my 30 seconds on that is that organizations really need to put a lot of emphasis on building managerial maturity. It's a young sector, and maybe that is an area that we have not really focused enough on. So building managerial maturity is I would say, the first step, and everything else kind of follows.
Wonderful. Shweta, what is your take?
Sure. Since I have the opportunity of using a crystal ball, I think let me just absolutely take the most of the opportunity. So I think I see a world, or I see a future where insurance as a concept, insurance as a subject, is not just introduced in graduation, but I'm going way back in schools. So I want to create a world where career choice, when you have I want to become a doctor, I want to become a lawyer, I want to become an insurance professional, should be something maybe that we'll hear our children in future really talk about.
Interesting.
So that's food for thought.
Interesting. This is a quick take from Shweta. So great. Fantastic. Let me also try to ask Ruchira. Ruchira, from your perspective, I think I am finishing the ladies first.
Thank you for that. Babu, very quickly, 3 things. Focus on job experience. It really needs to be focused on. I think insurance cannot be looked at as a fuddy-duddy old sector. It has to be a hip and happening place, and it is for all of us to change that perception by really doing some concrete things. For example, having vacations. Allow people to really work from wherever while they are taking vacation. Second is really having an upskilling and reskilling agenda there. People are looking to upskill themselves. Let's ride the bandwagon, not just for now, the digital piece and the data piece and everything, but really for the future, 10 years, 20 years down the line. And third thing is flexibility about where and when to work.
Interesting. I think the COVID and the pandemic has taught us to give that flexibility as much as possible wherever it is, possible to maintain control and at the same time get the productivity out from wherever it is possible. Excellent thoughts, Ruchira. Prakhar, as a practitioner in the insurance space, how do you see this crystal ball?
I'm sure most of the points have been covered, and if you look at the points which got discussed are very pertinent, given it's coming from practitioners who have spent years in this industry. I think I just have one point to add. Reward as a lever or as a retention mechanism will undergo a lot of change, primarily because it will get more and more regulated. If you think about reward choices, and to what extent the commission structures are governed today, there's still a structure behind it, but an aggregated level, which allows insurance companies to play around with individual compensations. All of that will change in the next 5 to 10 years because it's going to get more and more regulated. That's the journey of any reward cycle or compensation across financial services. At the end of the day, it's a regulated industry. So that's one thing that's going to happen in the near future.
Thanks a lot, Prakhar. And Mr. Kulkarni, you have been building the talent pipeline for this sector. So can you please suggest what is your thought as a crystal ball gazer in this area?
I think what I feel personally is that it needs to be highlighted what is the career prospects in this sector. Because if I join, as somebody rightly said that in manufacturing, if I join as a trainee, I can go up to the managing director also. So in insurance sector, the path of the career, the highlight, it has not been, I think, highlighted, at least at large, it has not been highlighted. So that need to be highlighted, that if I wanted to become an insurance person, so what is my role, what I'll be going, where I'll be landing, and what opportunity I'll be having. Then I said that there is a lot of job insecurity feeling about the insurance sector at large. That need to be removed. The sense of this job security is much more important and much more required. Then I feel that like we have a pharma skill development, we have a lot of skill development centers across India in the various domains, but I never came across with any insurance skill development center. So such kind of a concept need to be built. There are a lot of CSR this insurance company might be spending. They can spend this some kind of a CSR on developing these skills specifically required for today and future, which will be coming in the insurance, because it will be definitely having a lot of changes and very fast changes. So we really need to have such kind of a skill centers and skill building and the capability building in the basically insurance sector. I think that we need to have. And I said that again, there is a program like apprenticeship which government is trying to pursue in a large way. The target is now 10 lakh apprentices a year. Presently, we are at 3 lakh apprentices. So that I think insurance sector, banking sector are the sector who are the key contributor in this area, where they can really come up with this young talent. They can take them as an apprentice, they can groom them, they can develop them like a degree-based apprenticeship program for the insurance sector. I think these are the things which I look into. There's a huge potential in this sector.
Excellent. And Praveen, I want you to share the last thoughts from the panel into the crystal ball gazing.
Sure. Thank you, Babu. Everything to look up to. Okay, the industry is doing well. It's a sunrise industry. It's to a certain extent a startup industry, especially after the COVID took place. Okay, the industry itself is trying to kind of relook at the business models and the way of doing business. Now, when the industry is doing well, when it is, let's assume, a startup phase in terms of its processes, the talent that actually comes in, the ecosystem provides them with an opportunity for them to exercise their potential. And when that happens, of course, the talent would be seamless to get cross-pollinated across the industries as well. And, for everybody to be successful, or any individual or an employee to be successful, the sector has to do well, right? Otherwise, to a certain extent, the success doesn't straight away come. And I think the organizations now across the insurance sectors, what they are trying to do is to create an ecosystem where people are also successful. The organization will be successful, that is one part, but also the people within the organization needs to be successful. So that ecosystem building is what is currently happening. And I guess in next few years' time, there would be this opportunity of different genres of talent wanting to come into the industry, and also industry will have to really ring fence the talent, because the talent would have really got scaled up and they would be ready to get on to some other industry as well.
Wonderful.
So everything for us to look up.
Wonderful. Thank you very much, everyone. I really had a fantastic time with all of you, chatting to all of you. I wish we had more time to have conversation, but I think we could wrap up quite a lot of stuff in this last 40 to 50 minutes. And I think it is also time to inculcate a culture of entrepreneurship amongst the people, to make everyone equally responsible. And that could create the workforce of the future with equal dedication, equal sharing, equal participation, and also reduce the amount of attrition to take our businesses to the next level. Thank you very much, everyone, for a wonderful session and for a wonderful enlightening from each one of your thoughts. We look forward to have all of you in our future sessions as well. Thank you.
Thank you. Thank you. Thank you.
Thank you so much.
Businesses need to engage with their customers meaningfully in real time to drive revenue, customer satisfaction, and market share growth. In a world of smartphones, messaging apps have seen large-scale consumer adoption across the world. Customers would want to chat with businesses they engage with, just as they would with friends and family. Earlier engagement formats, such as web and app, were structured formats consisting of screens, tabs, and buttons. They required humans to behave like computers. But messaging is natural and intuitive and conversational. Conversational messaging enables businesses to chat with their customers, just as friends and family chat with each other. It is the most advanced format for engagement. Conversational messaging enables human-like conversations on commerce, marketing, and support, on messaging channels that customers are already comfortable with. People don't want to commit to downloading any more apps on their mobile devices, but they do still want to be able to talk to a hotel or restaurant or taxi services, for example, at the time they need to use that service. A conversational messaging platform provides two distinct but interconnected capabilities: the ability to define conversational experiences using chatbots, and the ability to deploy these experiences on any messaging channel using a messaging API on the GupShop conversational messaging platform. GupShop's conversational experience building toolset that includes the bot platform, conversational marketing tools, and GupShop's own IP messaging channel, GIP, is tightly integrated with GupShop's single API for messaging. That deploys these experiences across 30+ messaging channels. With conversational messaging, a business is always on and can converse with a customer 24/7 in any language. A business can handle millions of queries at one time, and these conversations can be highly personalized. With the help of AI and natural language processing, with a conversational messaging platform, marketers can create interactive and personalized conversational marketing campaigns across digital and physical media. Businesses can send messages with images, audio, video, and documents, cards, and interactive buttons on any messaging channel, and can integrate conversational messaging workflows with existing customer support tools, customer relationship management systems, and marketing automation systems, to name a few. Conversational messaging with a combination of conversational experiences deployed across messaging channels is the new digital front door and warm host that your customers have been craving for. Conversational messaging is the future of customer engagement, and it is already here. Businesses need to engage with their customers meaningfully in real time to drive revenue, customer satisfaction, and market share growth. In a world of smartphones, messaging apps have seen large-scale consumer adoption across the world. Customers would want to chat with businesses they engage with, just as they would with friends and family. Earlier engagement formats, such as web and app, were structured formats consisting of screens, tabs, and buttons. They required humans to behave like computers. But messaging is natural and intuitive and conversational. Conversational messaging enables businesses to chat with their customers, just as friends and family chat with each other. It is the most advanced format for engagement. Conversational messaging enables human-like conversations on commerce, marketing, and support, on messaging channels that customers are already comfortable with. People don't want to commit to downloading any more apps on their mobile devices, but they do still want to be able to talk to a hotel or restaurant or taxi services, for example, at the time they need to use that service. A conversational messaging platform provides two distinct but interconnected capabilities: the ability to define conversational experiences using chatbots, and the ability to deploy these experiences on any messaging channel using a messaging API on the GupShop conversational messaging platform. GupShop's conversational experience building toolset that includes the bot platform, conversational marketing tools, and GupShop's own IP messaging channel, GIP, is tightly integrated with GupShop's single API for messaging. That deploys these experiences across 30+ messaging channels. With conversational messaging, a business is always on and can converse with a customer 24/7 in any language. A business can handle millions of queries at one time, and these conversations can be highly personalized. With the help of AI and natural language processing, with a conversational messaging platform, marketers can create interactive and personalized conversational marketing campaigns across digital and physical media. Businesses can send messages with images, audio, video, and documents, cards, and interactive buttons on any messaging channel, and can integrate conversational messaging workflows with existing customer support tools, customer relationship management systems, and marketing automation systems, to name a few. Conversational messaging with a combination of conversational experiences deployed across messaging channels is the new digital front door and warm host that your customers have been craving for. Conversational messaging is the future of customer engagement, and it is already here.
Hello, friends. Welcome to Banking Frontiers Conference, INSURENEXT 2022. We're doing a very special session now with a panel of CEOs from the sector, from insurance, from broking, and other experts. And we're going to try to find out some of the bigger issues, some of the macro issues that are facing this issue, that the opportunities that are facing this sector, that are for this sector. I have with me 6 panelists, and we're going to try and make it a very interesting session. So welcome everyone. May I request the panelists to briefly introduce themselves, and then we'll go into the Q&A with each of you. Any order? Maybe you can start with Anup.
Yeah, hi. Thank you so much for having me today. My name is Anup Dhingra. I'm a managing director at Marsh India. I'm responsible for the specialty business, including financial lines as well as private equity and M&A.
Fantastic. Thank you, Anup. Sanjay, can we have your introduction?
Yeah, hi. My name is Sanjay Radhakrishnan. I am the CEO of Hero Insurance Broking. I've been on the insurance company side as well as on the broking side for the last 2 decades. So that's a quick brief about me.
Fantastic. Thank you so much. Can we have your introduction, Manoj?
Yeah, I am Manoj Jain, Managing Director for Sriram Life Insurance. I'm with the industry from last 20 years. And so I have seen industry starting and then evolving and now in the growth phase. So that's about me. Yeah.
Fantastic. Thank you. Sanjeev, can we have your introduction?
Yeah, good afternoon, everybody, and thank you for inviting me. I had been in insurance industry in GI terrain since 1984. Since last 17 years, we have founded this. We are 2 partners. We have founded this brokership. This is called Beacon Insurance Brokers. And our major domain is GI, and that to reinsurance as well as commercial part.
Okay, fantastic. Sanjeev Jha, can we have your introduction?
Thank you, Manoj, and thank you for actually inviting me. I am someone who is very new to insurance.
Okay.
I've hardly spent 18 months in the sector. I'm an entrepreneur. This is my 7th company that I am actually building. And the intention here is to figure out a way where technology and digitization can penetrate and go to the last mile. So I run CoverFox Insurance and have been in the capacity of CEO and MD for the last 12, actually theoretically last 8 months, but practically last 18 months.
Yes, your entry into the sector is very timely. Technology is that bullet train that is driving this sector.
Yeah, so advantage with me is that I know nothing about insurance. Probably I know a little bit as compared to all of you now. So
I think that's a very good. If you don't know, then it's really good because you don't have any baggages.
You come ready, unlearned. where many people are still struggling to unlearn.
Exactly. The issue is not learning, the issue is unlearning nowadays.
Unlearning. And Ramanan, can we have your introduction?
Good afternoon, everyone, and pleasure meeting all of you through this virtual medium. My name is Ramanan, CEO for India and South Asia for Intellect Design Arena. I've been part of Insure digital transformation journeys for close to a decade in my previous organization and this. Though a total experience of 25 years, 10 years doing digital transformation in insurance. I'd like to thank Banking Frontiers for doing this INSURENEXT event and being part of this panel of luminaries. Though people have experience from 84 and for 18 months,
Thank you. And here you are, another bullet train kind of person riding the technology track for the insurance sector.
Thanks.
Glad to have you aboard.
Thanks.
So friends, let's jump in. Big issue, perhaps, which has been tackled only incrementally in the past. Let's hope that I'm looking forward to finding out that things are really getting better. So have some notable improvements happened in underwriting that have enabled product innovation, that have enabled greater penetration, that have enabled the company itself to be more profitable and more and growth oriented itself. And particularly, I'm keen to know what has been the role of insurance brokers in enabling underwriting. So, open to anyone who wants to start. Yes, Mr. Rustagi.
Yeah, actually, underwriting and product innovations basically cater to the need of the masses. And I mean, to start with, the day before yesterday, when Finance Minister announced security bonds and all. So this is again an innovation which was prevalent in not many countries abroad, around 80 countries. Okay. But now BG, bank guarantee, can be substituted by surety bonds of every kind. Earlier it was only for infrastructure, now it is for various type of products, transactions. So these type of things, earlier to that, some 6 months back, there was title insurance, which was a need for the individual to go for. So, I mean, not many new covers has come in the market. Yes, technology has also played pivotal roles. There are 3 segments of underwriting. One is for life insurance. One is, you can say, for human being, and one is for the non-human beings. Okay. Human takes care of life insurance, health insurance. These are the 2 major segments where we focus subject matter of insured as the individuals. All other insurances are commodity based, you can say. So
we need to get to the underwriting part quickly.
Yes.
Because everyone here is an insurance expert.
So underwriting focus is different. There are different type of parameter, different type of products, different type of technology with the vehicles we use as a broker or as an insurance company to reach our target segments. So it's a combination of like we are using now drones for road projects to know the topography. I mean, it is not the InsurTech simply, it is evolving of technology and combining the technology with the underwriting skill to have a viable proposition of products, their pricing, and their sustenance level. So that is an evolving stage, and India is not far behind than any country, any developed country in that segment. That is all from my side.
Thank you.
I think
some insights from your side. Sanjay and then Manoj.
So from a insurance broker's perspective, especially for somebody like Hero Broking, where we have almost 100 million odd customers, So there is a lot of data that is around. Now, what technology is able to do for underwriting is that we are able to build personas around individuals. And when you're able to build a persona around individuals, you are able, you can tell whether somebody having a red car or a red bike or a different color bike is more risk prone or less risk prone. Because when you have such large databases, so what happens is that for an underwriting company, if there is more information that is provided to them, the pricing becomes finer and finer. So this is where a role of a broker or an intermediary actually comes in, where the data flow between the broker or the customer and to the underwriter, the more finer the data is, the finer the pricing is. So customers benefit if the pricing is cheaper, and pricing will be cheaper only if the underwriter knows that
But this kind of data, do they need to have a long history, or just recent data is good enough to start making?
The bigger the history, the better it is, because historical data is important for final pricing for any particular customer. Today, underwriters don't have that. It is missing with underwriters, and this is where the bridge that an insurance broker can play, especially the ones who have large customer bases, etc., can actually play in the underwriting space. Otherwise, because today, an underwriter today prices a product based on an average understanding of what the risk is. So good behavior is not good behavior is not priced, and bad behavior is also not priced. Average behavior is priced.
Manoj, you wanted to add?
Yeah. I think, see, insurance is basically at most trust and faith. So when it comes to life insurance, there's a set of proposal form which is now ranges from company to company from 1 page to 10 page. Luckily, we deal with a segment which is a common man. So probably we are the only company who will have only 1 page proposal form. But now this data has really helped. Even after taking 1 page proposal form, this data analytics has really helped us that there are certain things which customer has not disclosed. We are able to find out around the data which is available from various sources. So that helps us in putting the right pricing, ensuring that we are in the risk business, we can only mitigate. So somebody who's coming and buying an insurance, whether he's giving the right price or not right price. And I fully agree with my earlier speaker, Sanjay. What he said is that if we leave these assumptions to our underwriters, then they will do very vague assumptions and the pricing can go haywire. So the more data comes, and all these new tools are really helping in onboarding the policy. Once even we have taken a live, and based on this, we know that this particular geography or this segment of the society or this particular segment is bringing in high risk, that is more averse. And then we take a informed decision while taking the policy. And most of the insurance companies believe that ask those 100 questions at the time of signing the contract. Don't ask at the time of claim.
Okay,
because at the time of claim, particularly in the life insurance, the customer may not be around.
Right.
And historically, if you see, the agent always says, "Oh, sir, आपको कोई problem नहीं है. आप बिल्कुल perfectly ठीक हैं. आपका weight भी ठीक है." And the some amount of little missed details they always put. But if the same, and if the same customer goes to the doctor also says you're fine. But the same customer proposal form comes to the underwriter. We call them as the better doctors, because he has to see based on that 1 page proposal form that this particular life will be there for 30 years with us, how he will behave, how his health will behave. So from that angle, it's very, very important aspect. Thankfully, this data which is available now in the public domain really helping us to take a right decision.
And
because if we take
as an individual, I feel that we are all becoming so much more health conscious.
Exactly.
I think that's really good for the industry as such, for the customer and for the industry.
Like there's a big misconception that the people who had heart attack or bypass surgery, generally they feel that life insurance is not available to them, but that is not true. Somebody who had a bypass surgery can also take life insurance. Only thing is he's bringing an additional risk. His premium will be different. That's the only thing, and that's what is the job of an underwriter. And in simple terms, we say they are the watchdog for an insurance company to see what risk is coming. Because they are the first alert. If they go wrong, the insurance company can go wrong.
Absolutely.
And the effect will be seen not immediately. It will be seen at a much later time. Yes. And then it will become too late at that time. Thank you.
Thank you. Thank you. Ramanan, you wanted to add something?
Yeah, quickly. When Sanjay started by saying somebody having a red car, I thought he was tracking me and tracking my red car. So I was getting jittery, getting a little serious. Two points that I wanted to make. One thing is that I've been part of IRDA's Insurance Advisory Committee, and if people know, 8 years back, IRDA came out with insurance repositories. So your policies can be kept in electronic form, thereby collecting data. You do the things that I heard is the quantum of data and information that is available has to be for a significant period of time for you to make any meaningful assessment. I personally believe that insurance repositories can help in that area. The second point I just quickly wanted to make is that your underwriting process, one is data and it's the insights that the data provide, but it is also the instant gratification that we're all used to, right? Today, banks are saying 60-second, open your account. Upload your Aadhaar, give me a photograph, I'll check for liveliness check, I will validate with Aadhaar, and open your savings account. Okay, so people are getting tuned to faster decision making. I'm sure maybe some of the insurtechs in motor and others are also talking about minutes of issuance. Coming to life insurance and non-life insurance, one of the things is that amount of documentation and validation that happens. And if you're expecting either the customer to enter or the agent to enter, that much of amount of time is getting wasted. So there are newer technologies on data ingestion that are coming, that you are able to upload documents, extract data from those documents, upload it, and do third-party verification as well. If I do a PAN card updation or an Aadhaar card updation, can it be validated that it is mine before a decision can be taken? So these are technological changes that are happening, and we are playing in this area and supporting the insurers in this area. So I just thought I'll bring these 2 points up.
Absolutely. The data entry is such a huge friction for any kind of business, whether it's hospital or insurance or travel or whatever it is. So it's removing that data entry is a huge elimination of friction.
Absolutely.
And that actually drives business and so many things forward. I think Anup wanted to add something.
Yeah, so I know we've spent close to 18 minutes on one question. So let's move fast. So here's my little 2 bits. I started my career as an underwriter. I was lucky to be in the Lloyd's of London. And the first question I asked, what does underwriting mean, when I was in London? And they said underwriting means, this is anecdotal. Underwriting means you write under the name of the leader on the slip. Now, what underwriting basically means is it's an aggregation of risk. Some people have come together and taken a bet on a certain risk. In Manoj's case, a life of a person, or like in Sanjay's case, the red car or the owner of the red car or whatever, right? So point I'm trying to make is the mechanics of underwriting are universal, whether it's life, corporate, retail, general insurance, whatever, right? And the mechanics are this, that you have risk premium, which is experience-based premium, and losses. That's what Ramanan was saying, whether you have small set of losses or big set of losses. The second portion is volatility premium, right? Which is the estimate or the probability, like in Manoj's case, whether that person over 30 years of life, will he behave responsibly or irresponsibly? And the third portion is the profit margin. Now, what a lot of brokers and what a lot of insurance companies try to do is hire pessimistic underwriters and who presume the worst, that this person over the life, or a person who's driving a red car will be rash or whatever, right? and you can't get it wrong. So you imagine the worst case scenario, you put a premium around, this thing, and therefore you get a certain, risk premium associated. What a lot of brokers are trying to do today is, especially, folks like me at Marsh, that we go to a customer, a corporate customer, we tell them, you should not buy wasteful insurance. If you have a bypass surgery and you have enough money in your pocket, you don't have to buy insurance. So therefore, what we're trying to do is weed away the risk premium portion and make clients take conscious calls, especially in corporate, insurance, and have larger skin in the game, have larger deductibles. So short summary to my point, I think the role of a good broker, especially when it comes to underwriting, is not to have the client buy more insurance or buy the best bang for the buck, but sometimes, buy less insurance because if it is wasteful. So that's the point I want.
Absolutely. Everything has to be in right proportion. How much we eat, how much we travel, the size of the wardrobe. Too little is bad, too much is bad. I'm reminded of my first car, which was, you can guess, it was a red car. I'm also reminded that the first, when Maruti came to India with its car, predominantly it was red. So I think 50% of the cars of that model on the road were red. Nowadays, thankfully, at least there's much more variety in color. So I think that insurance using color as an indicator is meaningful. So some things, what I'm guessing is that same data will become more meaningful as we go down the road. It may age or color or something may be constrained by external factors and not be a very clear-cut choice. But let's go on. Thank you all very much for this insight. So a lot of you talked about data. So let's talk more about data. And the point I want to talk is that about consumption of data. It's one thing to have data, but the insurance sector doesn't work in a silo. It interacts with so many other sectors, the law enforcement, the insurance agents, the hospitals, the garages, and whatnot. So data obviously flows in and out from one organization to another as an Excel file, as a PDF file, as a photo, as a video, as so many different file formats. And how do you guys then try to make sense out of it, make it manageable? What kind of things can you automate? How do you drive things ahead so that data doesn't become like sitting idle and unused or too expensive to use? Maybe I can ask the people who haven't participated. Maybe Sanjeev, does this kind of question interest you?
No, it does actually. And I was very consciously following the previous discussion on underwriting also. And thankfully, having no knowledge at times is actually good. So but let me just come back to the question, and let me just go back to the previous one. And I'll not specifically focus on underwriting, but see, I have spent almost 12 to 15 years in lending industry. Okay. And I have spent this 12, 15 years in lending industry across various kind of lending products, be it microfinance, be it SME lending, be it lending to startups. And not many people know, but I was one of I was involved in launching PSB 59-minute loan, which is the Government of India lending initiative. And I worked at SIDBI also. I was de facto the head of strategy for SIDBI for 3 years' time, and recruited directly by DFS. So I'll tell you what problem that I'm facing with all of this, be it underwriting, and it's a big challenge in my head right now. And be it underwriting, be it how do you see the data, and how do you use that data, and how do you actually use that data for the advantage of the customer. So the first challenge I actually see in the industry is that historically, over the last 40 years, this entire industry has operated. And pardon me, Ramanan, you're part of IRDA, but I might sound a little anti-IRDA at this point in time. But historically, the way the industry has operated has been top-down. What the regulator wants, what the insurers wants, what the agents wants, not what customer wants. Okay, it's never been bottoms up. कस्टमर को क्या चाहिए हमको नहीं पता, हमको ये बेचना है, ठीक है. हमको क्यों बेचना है? क्योंकि हमारा बॉस ने बोला हुआ है. बॉस ने क्यों बोला हुआ है? Because there is a target. And why this target? Because yeah, whatever, right?
Right.
I also don't understand. So that's point number one. So it's always been top down and not been bottoms up. Number one. Number two, I still don't know why there is a distinction between a life insurance company and a general insurance company. Whereas in banks, see, banks are also catering to the same set of people who are buying insurance.
Sanjeev, can I request you to focus on the question? We can have a separate discussion on the bigger issues, but data consumption, data bottlenecks.
That's what I'm trying to come at. I'm trying to come at. Just bear with me. And that's why I said you've asked a question. Let me just bear with me. Okay. So if you look at banks, right? Banks are actually dealing with all kind of loans. All kind of loans. But here we have life insurance separate, special insurance separate, general insurance separate, and everybody's underwriting is separate. When you talk about underwriting and when you talk about data, why are we not following the system of CIBIL that we have in lending? Why can't we have consumer data recorded at one place, be it for a car insurance, red car insurance, or he's getting a term insurance, or he's getting a life insurance? I think we need at this point in time a major transformation around data and collectability of data. And how are you actually enforcing that? How is the regulator is trying to move away from regulating to management of insurance in this country and increase the penetration beyond 4%. So if we are not able to, I also have car insurance, term insurance, life insurance, and every kind of insurance. But I have to deal with 20 set of different kind of people. I can just give my PAN number to a CIBIL and every insurer can actually find out the way I do it for CIBIL for borrowing any money. Know about everything about me, all my insurance history, and propose me whatever I want. So I think that transformation is very, very important, Manoj. So I wanted to lay that point. All of here,
that is, yes, it is one of the questions in my question deck
not
later
gone
on.
through the question, but insurance repository won't help. What will help is a enactment or an ordinance or law which forces the regulator to create something like CIBIL.
Okay. So we'll come to that question also. Meanwhile, let's try to figure out the solution to this data friction. So Ramanan and then Manoj.
Sure, thanks. So first of all, let me clarify to Sanjeev, I'm not part of IIDA. I used to be part of the Insurance Advisory Committee, which is by act working for IIDA, but my tenure ended 2.5 years back. So you don't have to worry about that. Second thing, I just thought while you ended by saying that insurance repository will not meet your requirement, I will ask my colleagues in the insurance repository to reach out to you to explain what they can bring to the table. Maybe you can find value in that. I will leave it at that. Now coming to the question that Manoj asked, right? I mean on data, reality is that each person wants to communicate through their own medium, right? Manoj said Excel, somebody wants to send it as CSV file, somebody wants an XML file, somebody wants to send it as an attachment in an email. The reality is technology is currently available to extract structured, unstructured data and to populate the data. Okay, let me take a use case. I mean, a few years back, I see a lot of people, all of us would have interacted with motor insurance. So let me take motor insurance as an example. This no claim bonus of motor insurance used to be misused, right? People would jump from one insurer to another by saying that I didn't have an accident last year, and there was no way to validate this data. Now with all insurers having to share their claims data to IIB, there is an ability for insurers to validate if somebody is claiming that I'm moving from X insurer to Y insurer and I want to claim no claims, is this valid or not? And today people are able to get exact data saying that no, you had a claim and this is not valid anymore. Okay, so I'm sure there are other things as well. Today, most of the states, I would love to believe all states, but I'm using the word most of the states, issue death certificate within 13 days. Okay, so if you want to validate it is linked to Aadhaar in most states, you can't get a death certificate or you cannot get a burial done or cremation done without having the necessary documentation. So this validation of death can also be done seamlessly by insurers. And I'm sure there are other use cases for data interfaces. Technology is available. So we in Intellect call it open insurance architecture or composable architecture. Thereby, with open APIs, you are able to share and consume data seamlessly. I think that's the way the world is moving. And the data extraction part of it, we have a product called Document to API, which is basically says any information that is available in a document, I give it to you in an API form so that you can consume it, be it structured or unstructured. So that's the way the world is moving, and we've helped more than 10 large manufacturers in the US and in Europe to enable their journeys, not just underwriting, any journey using Doc to API.
Interesting. So I'm happy to see technology coming up with solutions, because otherwise manual is always a challenge. So Manoj, you wanted to also add something on this. You are on mute, Manoj, if you could unmute.
Yeah. So basically, I think Ramanan has already touched on IIB. I think insurance, IRDA has started the body called IIB, which is Insurance Information Bureau. And all insurers are supposed to share the data in a structured format. And the data is available. Even earlier, the same problem life insurance companies also used to face, especially on the death claims and especially on the mis-selling. So now the data is available, and the data is really, as you rightly put it up, that we deal with intermediary. If you ask me, who's selling life insurance? 80-90% of our selling is done by an agent. And who owns the customer, whether the agent owns the customer or a life insurance company owns the customer. That's a big debate, because the broker or the agents feel that this is their customer, where the life insurance feels this is my customer. All those debates are now over, and available. And technology has really immensely has helped in this. And I think it's a matter of some time where all these data, what a beautiful suggestion Sanjeev has given, that the way you have the civil score, why can't we have a score for the insurance industry? I think we will move in that direction. And if we move fast, I think that will be much more better. So that, because even I come from lending business, before joining 20 years back on the insurance, I was also a lender. And at that time, the civil score was not there. Now, without civil, nothing moves. And I remember when this concept came, everybody saying, no, it will not work. Now, without thing, you can't even take a loan. So I think for right reason, it will come. It's a matter of time. I think there's an evolution which is happening. And if that comes, then the entire gamut of insurance selling will change.
Okay, that's interesting. Fantastic. So let's move on then. My next question is actually about collaboration. So we have already touched upon collaboration that is through a central agency, whether it's a data repository or a information bureau, or even perhaps the IRDAI and those kind of bodies. But what about one-to-one collaboration or one-to-few collaboration? Where do you see the scope for that? Because, the way I'm seeing it, insurance is interacting with more and more organizations, different kinds of organizations, whether it's an airline, whether it's a hotel, whether it's a hospital, whether it's this, whether it's a car manufacturing company, whether it's a garage. So how do you see collaboration happening that is beneficial for everyone? And if it is not happening, then is there a role model somewhere else in the world that we should look forward to, so that we get collaboration, and that collaboration then helps everyone? Yes, Sanjay.
I think on the collaboration bit, you will be happy to note that there is a huge digital ecosystem in India. Whether it is education, whether it is in your Amazon kind of or an open what do I say? And these are all open ecosystems that are there. Whether it is a healthcare, different segments are already present and have a digital footprint. So it's quite easy for insurance players to actually kind of collaborate with some of them. So simple example, I give you an example of a company which is into broking of houses.
Okay.
And I'm not taking the name because, but so this company actually also issues policies for homeowners or people who are basically renting a house. So there are various ecosystems which are already there. It is for us insurance intermediaries and for insurance companies to actually use that platform and create products, generate kind of requirements. See, there are requirements, but a lot of times the customer themselves don't know that there is a requirement. For example, if I book a hotel room during this COVID period, there are hotel chains which today offer a COVID policy along with that. In case, so those are, yes, and those kind of products are already available in the market. It's a question of integrating, and it's a question of integrating online with these ecosystems.
Are there any markets in the world that really are leading in this kind of thing?
I think apart from India, China is already there. UK to some extent is
China is leading. That's interesting.
China is, I mean, you can do a lot of things in China on the insurance platforms or on any other platform.
Fantastic. Anup, would you like to add something?
Actually, you know what? Let me give you a perspective from a corporate purchase. This thing, and take a cue from where best practices are there. So if you see a corporate insurance purchase, Manoj already alluded to this thing. On life side, you have one-page proposal form, but on a health side or a motor side, you'll have 7 pages of proposal form. But God forbid, if someone wants to buy directors and officers or cyber or some exotic product, they'll have to, I'm kidding you not, fill each proposal form for each company plus additional annexures. So what we're trying to do is, one is that, right from the contract inception, basis of the contract is the reps that are being made by the client, by the consumer. We're trying to, collate a lot of things where collaboration can be there between different insurers, different participants of the industry, and do that. 1. 2 is, I think you already mentioned IIB, CIBIL, cooperation items and all. I think the second item is that, blatant examples of fraud, especially, cover note fraud in the motor side and all. I don't know if there's a mechanism, and maybe Sanjeev Jha can mention about, his experience. I don't know there's a mechanism because my early part of my career, I used to be an underwriter, and the biggest fraud examples we used to see were cover note frauds and death frauds on personal accident side and all. So I don't know what the insurance industry, and that was 20 years back when I started. So I don't know what the insurance industry is doing on those kind of things. Doing more business and collecting information, of course, there's cooperation required, but weeding out bad apples is also an important item where, you need to cooperate. That's point number 2. Point number 3, and the last item from my side is that there are some pockets of excellence, and while China, you may do a lot of things on the InsurTech platforms or, open platforms and all, that's fine. But simple things. Once, I think someone mentioned about the NCB and IIB. Now that IIB exists in a very different form in the corporate space, but if one insurer has to, move, or one insured has to move from an insurer A to insurer B in the corporate side, the simple thing that in USA, you can get a loss run, which is validated by the broker, that this is the loss experience of this customer over 10 years, and that is validated and industry accepted. I don't even think that there is a, mechanism of loss run transition from insurer A to insurer B, which is broker validated. And we have big brokers in India now, So I think there are basic things. More importantly, cooperation may be required on consumer side, where volumes are high, where customers are, there, where there's a lot of, cross mobility between insurance companies, people move like motor insurance, etc. But I'm just, giving you a little vantage point from what I see every day on the corporate side.
Interesting. Very interesting. Ramanan, you want to add?
Yeah, quickly. Sanjay also pointed out there are a lot of collaboration happening. So, for example, if you take a housing loan, they insure your life to make sure their loans are protected. If you take an Ola or Uber to airport, they give you an instant insurance so that if you miss a flight, they will insure you. Things of those nature are already there. Similarly, there's a good collaboration between repair shops and general insurers, right? I mean, because they want the money faster, so they are far more adaptable to change, far more willing to accept technology to upload photographs and things like that, so the underwriter can take the claims underwriter can take faster decision on how much is the insurance amount that is being to be paid to for the repair of the vehicle. One pet peeve that I have for many years, I thought I will table it here, and if somebody is listening and can find a solution to this, it will be very useful for all of us. If you've been a caregiver and if the doctor says morning at 9 saying that the patient can be discharged, by the time you leave the hospital, it is evening 5 o'clock. Okay, that's the earliest. Okay, if not later. Okay, and most insurers advertise 30 minutes claim settlement. Okay, and when you actually dig deep, the issue is that that information from the time it reaches the insurer till they settle is 30 minutes. But the process of information flow between the hospitals to the insurer and the return is taking much longer. Thereby, we all spend a crazy amount of time waiting and doing nothing, twiddling thumbs, right? I mean, the patient is impatient. You have to be available and cajole them. Hospital is actually losing money, right? The bed cannot be used till you leave the hospital. After that 9 a.m. when the thing gets closed, they can't actually do. But for whatever reason, that data exchange has not been able to achieve. So if we are able to crack this, I think the cost of healthcare can itself come down, in my opinion, because hospitals are loading this one day into your bill somehow. Okay, not directly.
Thank you.
Okay.
So friends, we need to close in another 3-4 minutes. Let me ask each of you to share in this forum one friction point that really irritates you, or that you think is a real irritant for the industry. If each of you can speak for half a minute on your pet friction point for the industry, then that will give us a picture of what the challenges that need to be overcome. And let's start with Sanjeev.
I'll start with the regulator again.
Okay.
I think the biggest friction point is the regulator. It has to stop regulating. It has to manage and develop insurance in India. And we talked about collaboration. In India today, 80 crore plus people transact digitally. Why can't insurance? It's a friction point in the head of the regulator. Enormous friction point. Let the regulator stop regulating. Let it manage. It should be IDMA instead of IRDA, Insurance Development and Management Authority, not Insurance Regulatory and Development Authority.
Okay, thank you, Sanjeev. Who wants to say something? Yes, Mr. Stagi. Yes.
Yeah, basically, my point is there has been collaboration, which we have talked about, collaboration outside insurance industry. I'm talking of collaboration within insurance industry. So we have embedded products and all those things which we have talked about. Collaboration within insurance industry is the things which is I think missing. So we do not have knowledge resources within our industry. We do not have any center point on which we can land in. There are all over the world, mostly there is no effective mechanism like General Insurance Council we have or Life Insurance Council we have, which is nothing to do with regulations. That is our own institute, but we do not strengthen it. Maybe we are fearing the competition or anything, or maybe the brokers. So there is in insurance industry, I do not feel a significant deficit of collaborating within.
Okay, thank you, Mr. Yes. Point noted. Ramanan?
Okay.
Very briefly.
30 seconds. Before this, I think one session before this, there was a presentation by Hitesh Arora on digital transformation in insurance sector. One thing that I picked up there, and I'm sure all of us might agree, that today CIOs and their teams pick technology products that are interesting and available in the market. Okay, what it needs is to how they bring them together for the digital transformation. Okay, most CIOs
their branches. Like, give an example, like a public sector bank is having 10,000 branches and is having a tie-up with another life insurance company, where all 10,000 branches that insurer is not able to cater or not able to do. Now, the same bank can have a tie-up with companies like us who are not very highly present in an urban market, but very much there in the rural and the semi-rural market. And those customers can get benefit and get a choice, because large distribution points are still not selling insurance. In
Bank
India,
assurance
if
is one
the
of the largest channels.
combined bank branches are 1 lakh of all the banks. I have not seen the latest number. I can say that only 30% of them are only selling insurance. 70% of the branches are not selling, and that network is underutilized. And
Thank
there
you,
are
Manoj. Thank you.
Thank you.
We
So
need
this
to
is
go.
one
Thank
point.
you so much. I noted
Once we have a
point very
collaboration, once we have a collaboration, then this can be better for the industry.
fantastic.
Okay.
Very valid point. Anup, you want to say some last comment?
Yeah, here's my last comment. Everyone on this forum has said, how do we work more efficiently in the insurance industry? My worry is my firm has spent 150 years of existence being the leader in the insurance broking space. I work with 70% of Nifty 50. When I talk to boards, their worry is not how do we get more insurance efficiency or how do we buy insurance more efficiently. The worry is that insurance is losing relevance. When someone develops intellectual property, when someone makes a listing through a SPAC, when someone is creating a digital platform and is a startup, is a cloud-based company, insurance traditional products are not there to cater to these kind of risks. So the world is moving at a different pace. The risks are moving at a different pace. About pandemic, about intellectual property, about patent. Today, if we go to boards of the companies, so that's.
Thank you so much. Your point
Thank
is
you.
very valid. Thanks for that insight. I think
Did we lose Manoj? Or?
I think so.
Yes.
Yeah, Manoj, you're back.
Sanjay, are you
Yeah,
there?
I would just add one last point is that I think insurance penetration in India is still very, very low. And the reason for that is that the top 100 cities, see, we as Hero are present in almost 2,700 locations in India. These are dots on the map. Now, the top 100 cities are where everybody is fighting for the pie. There's nobody in the hinterland of India, and that is where I think the next growth is likely to come from. And if you go in a digital form in those places, and companies such as Shriram and Hero and some of these companies which cater to that segment is where I think we should be focused on in the near future if we were to increase the insurance penetration.
Absolutely.
Very well.
Thank you all very much. Enlightening, informative discussion. So new points have thrown up. Maybe banking friends will try to cover those in the magazine, in events like this and other forums. Thank you all very much. Have a nice day. Have a great year ahead, 2022.
Thank you.
Thank you. Thank you very much.
Thank you very much.
Thanks.
Hello and welcome to INSURENEXT. And this is really a panel on what's next in digital transformation, in innovation, in blockchain, in technologies that are going to drive the future for the insurance sector. With me today, we have some very, very interesting panelists who are going to join us for this wonderful conversation. Welcome to this wonderful panel on digital transformation and innovation next for INSURENEXT. May I request Jitendra to kindly introduce yourself, please.
Hi, Babu. Dear colleagues, this is Jitendra Agarwal. I am a founder of Relevanta Solution. In the space of digital transformation, we are trying to create value by introducing different partners and simplify the journey for customers, bringing next edge competencies and coaching people for higher performance. So I'm really excited to be part of this panel to really add and learn perspectives of creating the future transformations.
Welcome, Jitendra. Welcome to this interesting conversation. May I request Rohan to kindly introduce yourself?
Thank you, Babu. Pleasure to be on this panel. Thank you for the invite. I'm Rohan. I am the CEO and co-founder for Toffee Insurance. We are a new age insurtech startup, came into being about 4 years ago. Essentially, think of us as pushing the envelope on product thinking in the insurance ecosystem, tech first, digital first. Idea today, how we operate is we try and co-create products across various lines of businesses and categories, whether those are GI, whether those are life, or whether these are health, into making insurance products which are a little bit more accessible, affordable, and relevant to today's consumer, right? Whether this is a millennial or whether these are sort of tier 2, tier 3 consumers who largely suffer from accessibility issues across insurance. Thank you.
Wonderful. Welcome, Rohan. May I request Behrouz to kindly share a small introduction of yours, please?
Thank you, Babu. So hi, I'm Behrouz Kamdin. I'm a partner with Deloitte India, and my focus has been financial services and technology sectors. Now my greater focus is going to be on insurance and insurtech, and therefore I thank Babu for giving us this opportunity to be on this panel and to discuss and learn about technologies within the insurance sector. So thank you, Babu.
Welcome to this wonderful session. And I would now like to invite Anubhav to share his introduction with us as well.
My name is Anubhav. SaaS space, and the other one was the D2C consumer tech startup. Then I worked with HDFC Life. I saw there is a huge space for innovation and transformation in the insurance area. Worked with Jitendra at HDFC Life for around 3 years, led the entire transformation journey there. And then I head the digital transformation for HDFC Ergo. I think very exciting space to be at. Last 15-20 years, I think whatever the internet has seen, in last couple of quarters, I think we have seen multiple of that happening. A push product is becoming a pull product. A very low penetration sector is becoming a very high penetration sector. And I think all of us in the insurance sector are into this journey of evolution. So I'm very excited to be here to learn from all of you. Very excited. I'm sort of a newcomer in the GI sector as well. I keep asking questions from everyone, and I think that's the one way to disrupt things, because I just say I don't know it, right? So why not we do it in a new way? So happy to be here and hear from all of you as well. Thank you.
Wonderful. Welcome, Anubhav. I have a very, very interesting luminary from the insurance sector. He is KV Deepu, and he is the Chief Operating Officer. He heads innovations in the very interesting leading financial services insurance company in India today, Bajaj Allianz.
Thank you so much, Babu. Thanks for your warm welcome, and it's a pleasure being here.
So we have seen in the last few years a lot of crisis. There has been a shift, and then the business has seen a lift. And then further, we all started sinking when we saw the third wave coming. But fortunately, again, it is plateaued, and again, we can probably think about having a lift. How are we as organizations, what are we learning, or what have we learned in the last few months to be ever ready to further this innovation agenda in this organization? I think as an innovation head, I would first ask Jitendra, who has been a former innovations head, to just start off with his perspectives, and then we would go to the rest of the team members. Jitendra.
Okay. Thanks, Babu. So as a part of a larger agenda of business excellence, which was largely the term organization was understanding and was driving. Innovation was always at a back burner, and it was there in pockets. Over a period of time, with digitization shaping up, and it is also becoming economical, and also creating a promises of those delivery. There was a kind of a phase or phasing out taking place, while the excellence continues to be towards making a larger makeup of the organization towards continuous improvement. There has to be a disruption to be brought in, and that's where innovation as an agenda become a real drive for an organization.
Wonderful. Thanks a lot, Jitendra. Deepu, so I just wanted to understand from you.
Babu, again, it's a nice question. So when you look at this, conceptually, you can look at it in 2-3 different ways. One is when you look at data, one is the actual meaning of data, right? Because we have seen so many data security incidents happen globally, right? So one is the value of the data, and the other is the intangible value, right? In terms of its impact on your brand and so on and so forth. And when you cut to it, when you look at data broadly, you look at it in 2 ways. One is, how can it help you generate revenue, right? Because the whole idea is, how do you get it together to basically offer better products and services to your customers, and in the process, grow your revenue. That is one. The other angle is, how do you look at it, for example, to solve problems? I mentioned to you, right, that for example, if somebody is clicking on our branch, right, how can you give digital servicing on the spot, right, and make it a win-win for the customer? And then if you look at, some of the metrics, which we work on, there are, 4-5 buckets, where I can talk about. One is, data can increase transparency, because when you talk about why you took decisions, it can have huge cultural impact, right? You basically are able to explain everything, it just, increases transparency, that's one. The other is, of course, the standard classic definition of the value of data, which is it gives you insights which you did not know before. So clearly, right, you discover as you go along. That is there. The third is when you're talking about firms today, it's not about a one-size-fits-all approach. As you use data, you can customize at scale. I think, that's clearly, one value data brings in. Fourth is automation, because when you do an analysis, using data, you can do a clear Pareto. You figure out that if you basically automate these 3 processes, it contributes to 80% automation, in that area. And lastly, it's also about innovation. Data can also create serendipity. Suddenly you look at patterns which you did not see before, right? And that's how, it can help you, innovate.
Anubhav, you have been from the general insurance side. And I think one of the most important sectors which have played a very important role, especially during times of uncertainty, with a deluge of claims coming into you, and with shortage of people being there on their desk during that time. And you have ridden this uncertainty wave in last few years. So how have you been, riding these waves of uncertainty and keeping the clock ticking, and at the same time constantly innovating yourself and taking the business to the next level for the lifts as well as dips?
Very nicely put question, Babu. So, there's a good tailwind we had at HDFC Ergo. If you remember, in 1920, we acquired one of the large standalone health insurance companies in the country. And by the time the pandemic actually hit us, we were in the middle of merger. So I would say that was a good and bad part both. Good part because we were in a sector which was booming, and being the second largest player, obviously it gave us a lot of responsibility as well. On the other hand, since anyway the tech integration and everything was happening, we were sort of ready for the peaks to come. So if you look at each business, typically have a seasonality, right? Like from a sales side, typically a seasonality comes in the quarter 4, right? And you prepare for that, right? And that's how all the startups work, right? They have a big billion day, and because of that big spike, that becomes the base for the startups going forward, right? Similarly, insurance company typically will look at quarter 4, right? And that's where the scale hit. But I think the entire demand which happened from the buying side as well as on the claim side was really, really huge. But I think we could drive ourselves by 2-3 things which we could do. I think one, we as an organization took it on us as a responsibility, right? I remember those days when the first lockdown happened. People were, and a lot of people work from office, so they work on desktops, right? Like that's how the organizations typically work. Our guys used to actually put those things into cars and give those desktops back at the home of the claim processing teams. And within a very, very short period of time, the entire team was up and running. So that really helped. I think second thing which happened was the entire ecosystem for us, right? Whether it is agents, we have like 140,000 agents. Everybody pitched in, right? And we said that we have to ensure that we continue to deliver what we have promised, because claim is the moment of truth, right? We all talk about it. Like in life insurance, the claim is only 1% of the people take claim. In motor, 25% of the people typically take claim. In health, around 6-7% of the people take claim. But that number really, really changed rapidly, right? So I think ensuring that the entire engine keeps running, and since our stack was almost new that particular point of time, so that's the third part of it, right? Like the first part was the entire responsibility part, where we ensured that the things happen from a cultural standpoint. Second, using the entire ecosystem per se. And third, the entire technology backbone, the way it was being built over a period of time, was truly tested. We actually migrated a lot of services to cloud very, very instantly, so that those spikes are not really a problem. Right. Similarly, in claims we used to face a lot of reimbursements, which used to take a lot of time. Like for us, doing a pre-authorization when somebody reaches a hospital has been a solved problem, right? We do it in like 15 to 20 minutes or. Similarly, claim when somebody is on a time of discharge, it is pretty okay, right? So we continue to measure those metrics, and we could see those spikes coming in, and we could manage them, right? And now that has become a standard going forward. Luckily, like the third wave has not been that severe so far. But as I told you in the beginning of the session as well, that we actually track every day how many cases are coming till the CEO level. And if that number is going out, is there a red flag or not? But I think this wave, we are pretty much settled, fortunately.
So Rohan, you are a company born out of innovation. You are a company which is born out of technology. And you have been not just constantly innovating, but you are born out of innovation. And there are two types of innovation there. One is solution-driven innovation, and the other is a problem-led innovation. There are a lot of technologies there in the market which are existing, and at times businesses try to fit their problems around technology. And there are a lot of organizations, the thinkers, who put technology around their problems. So in your process and practice of innovation, how have you been working in this entire system by engaging with other members of the ecosystem and creating an ecosystem that would create disruptive performance for your business success? How have you been working in this process of innovation?
Yeah, I mean, it's an interesting question, Babu. So, and I think to understand this question fully, you have to sort of understand the insurance landscape at large, right? From privatization point of view, right? We still continue to have a Mediclaim hangover from the 80s, where we sort of have this one large umbrella product with everything built into them. And within the first decade of the privatization, what we saw was the unbundling of the entire insurance value chain, right? So we figured that there were, now 30, 40, 50 insurance companies, and insurance companies were trying to do everything themselves, right? Everything from risk management, underwriting, product building, building distribution, doing marketing, creating sales processes, building tech stacks, etc. Everything. And so that unbundling had to happen. And the first guys in terms of innovation and disruption that came through towards the end of the first decade was essentially distribution-led businesses, which said, look, a new digital India is coming alive, a new set of a consumer who's going to behave a lot more actively on the digital front is going to come and become more relevant. So how do we take existing stack of products? We know in the last 4 or 5 decades, LIC has been able to not had more than 10 lakh agents on the ground. So there are obvious sort of constraints in feet on street and manpower, which can take products physically to the breadth and depth of the country, right? So digital India had to be sort of the next wave. And so distribution guys, web aggregators, Policy Bazaar, Easy Policy, and a bunch of these guys came in and said, look, let's take these products, let's relieve the burden from insurance companies and bring it to a centralized repository where we can allow easy accessibility to a new digital India that's coming up. Right? So for us, really sort of the innovation or building on pushing on innovation came from a sense of the current landscape, where we felt existing processes were not mature enough to solve for this problem. The customer actually needed to look at simpler products They needed to relate with insurance like a non-financial product, right? It's easy to sort of compare and put ourselves in the fintech landscape and saying, lending is very difficult. Everyone wants money, right? Everyone wants money because they want to buy the next big thing. They want to buy the next phone. They want to have weddings and everything else. Insurance is a promise for something that may or may not happen in the future. So trying to convince someone, and when you try to convince a consumer on that journey, if you complicate that product, it becomes very hard. So for us, innovation was led on the back of a lot more product thinking, on the back of existing processes which were not giving the right solutions to the end consumer. And that's where we started. So hopefully that answers your question.
Wonderful. Behrouz, you have been anyways looking at a lot of players in the insurance and in the insurtech market. What has your reading been in this entire sector, especially how are organizations looking at the innovation model mix when you look at it? There are people who are looking at creating their own innovation themselves. There are people who are looking at adopting the innovations from the market, blending it with their offering, and then creating something new. What kind of mix is happening in the market, and how are organizations growing, or they creating an ecosystem which can grow organically as well as inorganically? What has been your reading in this market since you have been a consultant in this sector for some time?
What we have experienced is it's a mix. So it's not that one size fits all. It is actually a mix. And the most important factor which we've seen is the IP. See, any technology when it's attached to it, the IP is very relevant. So any mix or any model that has to come about has to take care of what the IP is. What does the company require out of that IP? How are they going to exploit that IP, whether it's going to be commercially done, whether it's going to be internal, how critical it is, and whether you can really do it commercially. So all these factors have been taken into account. And what we have seen in case of models has been that, one, of course, you have it captive because large organizations do have captive innovations and they do it internally also. But we've seen cases that, internally could be time consuming. It could be more expensive. And therefore, they have actually looked at insurtech companies to see how they can work together or collaborate with them. Some of the instances that we've come across was that they've actually bought stake in those companies and tech companies, and then later merged those companies with them because the technology was so critical to the organization that you could not have kept it outside the organization. Maybe from regulatory perspective, maybe from the IP perspective itself. So they have merged that technology company into their own organization and made it part of them. Somewhere we've actually seen is that it's a technology company which provides services to multiple players. So the technology company has kept the IP with them. Several companies, and that has worked very well in many sectors of it. The third part of which we are now seeing is that the actual insurance companies or the actual finance companies are funding the technology companies because they need funding also. Of course, you have a lot of private equity players, and we have heard over the whole decade of how our tech companies are getting private equity players, how they're flipping their headquarters from India to Singapore to USA. So you do have private equity players in it, but now what we are seeing is insurance or finance companies in India also are collaborating with them to start from funding itself on the technology, and then maybe over the years to see how they can exploit that technology. Whether they want to keep it in-house or they want to exploit commercially is a decision which they're not taking now. They're taking it later and then looking at it. So I think there has been a mix in the innovation model that companies have adopted, and this mix will stay. So it's not going to be one answer which fits all the innovation requirements.
That's a perfect consultant's answer. We got a 360-degree perspective from each of these segments. Let's get on to the next area. One of the most important aspects of any insurance business is basically in the area of customer excellence or customer satisfaction and customer delight. And a lot of data, customer insights have always driven the innovation agenda in the organizations. We will first start with Rohan as to how has your experience been when it comes to your customer interactions and their expectations from you, when it comes to digital touch points, where it comes to physical touch points? How have you been crafting your strategies around this?
Yeah, no, I think, the way we've looked at our business and our consumer segment is trying to understand different segments of customers, because every segment of customer has a different requirement in terms of touch points. So what we find is that the millennials or the younger generation, which is used to the Swiggy, Zomato, tap sort of ecosystem, are what we call low touch requirement, right? Everything, as long as the information access to them is digital and real time and straightforward, I don't think that requires too many sort of interruptions or interventions in terms of creating a phygital or a hand-holding sort of process. And on the other hand, we find that when we work with channel partners which are not very digitally savvy, a more phygital approach works much better. And we call these the high touch points, right? Where they may not have a frontline staff which is smartphone savvy, which means they're great at operating WhatsApp and SMS, but they still need a phone call here and there to feel assured or validated that they are talking to someone about a financial product at the end of the day. So I think for us, it is being very flexible and not diving and putting all eggs in the same basket, which is taking one approach only. Because what you will have is and it's a hybrid model, right? And I don't think there is, unless your business or your product is oriented towards one specific segment, you will still have to keep it open. And I think India as such, as a market, is such a homogeneous sort of mix of both sort of new age customers as well as sort of customers who are a little slow to evolve to the complete sort of digitization. You will need to have that flexibility in the stack and the platform and the touch points that you create. So I think there is no single metric. I think you'll have to just be very, very cognizant of the segments that you're serving and create matrices around those.
Wonderful. So Anubhav, in your experience, especially when you talk about a digital transformation landscape, when you deal with the customers, what kind of roles are being played by this data in adopting the technologies and delivering the experience to the customers? What new do you see happening in the last few months and going forward from here in the data play?
Sure, yeah. So Babu, I think 2-3 things are happening again in the entire ecosystem as well, right? So when I was at HDFC Life in 2017, we were the first, I would actually call a BFSI company in the country to move to cloud completely. And I think the whole idea to move to cloud was to have the entire structured and unstructured data at one place. Typically, what happens in a large corporates, right? You have each data available in silos, right? Because the only thing which you do typically with the data is build MISs, right? Or look at some sort of a basic propensity model to engage with the customer while renewal is happening. But I think the entire people have started looking beyond the structured data, that what else can you do, right? So the entire analytics around voice, right? So if there is a voice call center and you are able to convert that into text and build a sentiment analysis on top of it and see what is the next best action to do with the customer. Similarly, on the entire image AI perspective, right? Like the entire lockdown happened and still cars were being broken down, right? So we launched a massive project about identifying a car's damage through an AI-based camera. So now so many breaking cases happen, right? Like when you did not renew your insurance because you thought that the car is not even moving out. So a massive amount of break-in insurance for the lapse insurance policies came into light. We launched that entire break-in through AI, where you can actually click the image of your car, and we will believe that we will be able to identify which car is it, what damages are there, and we could give those insurance spontaneously. I think the entire world of technology has evolved where the entire data landscape has changed. So one, the entire ability to ingest such data into a certain platform, the ability to make sense of that particular data, and ability to throw insights from that data, which is structured and unstructured together, to various assets and various interaction points. I think these are the three major things which we are doing extensively. We continue to look at what are the data points which are not capturing today, how can we make sense of it. We continue to put into a platform so that we are able to process it properly. and then we continue to throw insights to various interaction channels as well.
Absolutely. So ecosystem creation is one of the most important aspect of any innovation for that matter, because nothing will work on its own. So compared to whatever we have been doing, I think Jitendra has been master in areas of things such as cognitive bots, AI, ML. He must have been one of the masters in the insurance industry who has created maximum bots kind of stuff. So compared to those technologies which are already running, how do these new age technologies appeal? How are organizations trying to, accelerate themselves or probably transform into these new age technologies? What value do they hold? Jitendra, I think you should probably answer this question before I go to, Rohan or Anubhav or Behrouz on this.
Sure. I think thanks for giving this opportunity because this question is a very, very relevant question. Certain technologies have worked in terms of creating efficiency, and they have been the backbone of automation. Now, how are the other technologies sitting on it or can be mounted to create the next level of a leap? So just building on to that, say if there is an RPA solution, there is a voice bot or a touchpoint experiences. Think about it. How can blockchain be an entity which can be coming as a next layer? So whenever you try to bring in a process-oriented change, there is an input side of it and there is an output side of it. Now, for both input and an output is a classical entity where the blockchain comes in. In order to really source those inputs, which is not necessarily confined to within the organization. So organization has worked and have created those islands of data points, put them into data warehouse, there is a data lake and everything available. Now there is a larger ecosystem which is having data available. And those data could be available from a government bodies, that could be available in India Stack, there could be other collaborations and consortium kind of a format. But they are essentially all those inputs which otherwise were not available, could be made available, and blockchain becomes a vehicle for you. The moment you source this information, say for example, in the context of insurance, death certificate is something which is a claimant is putting in, and that becomes a starting point of taking that as an input. Think about it, death certificate has been generated prior to that beneficiary actually coming to get a physical copy of it. It has been generated by some government body in some state. So that particular information can be triggered directly to an insurance company, and it can actually kill the whole TAT cycle very differently. And it can bring an authenticity layer of a different nature and avoid some of those frauds associated with those kind of a claim. There would be some time where we will rationalize and understand the importance of a blockchain and in making some of those ecosystems really combined, and that make a completely new way of creating an experience to the customers.
Interesting perspective, Jitendra and Deepu. So I just wanted to understand from you, in what ways organizations are set? You already have a lot of data, and how your business expertise and data is combining together to add that value.
We all understand the power of data and analytics today. Having said that, you need somebody who has a business view of the entire landscape to ensure that it becomes meaningful, in terms of a call to action. I think one of the first areas is when you have a data scientist who's working on raw data, when you look at business expertise, you can help the data scientist refine the target audience, because ultimately we need to ensure that we cater to the right customer segment, because who are you doing this for? So that's clearly where business expertise comes in. The other is we all know, right, that it's not just data alone, right? There is an element of gut, right? So this combination of data and gut is where business expertise can come in, because that will help people leverage data in the right manner in terms of coming out with the right solutions in terms of products and services for customers. So to give you an example, let's say data indicates, let's say there is a location, right? For example, you look at multiple indicators, right? You look at surrogate data, And that's where, business expertise can come in to say, which data points do you pick, which are relevant for you. So that's where this combination of data and gut can help. The third is a point that you already picked, that the whole idea of data today is not about having a central repository or a central team, but how do you democratize and decentralize so that decision making can be carried forward to the point or the person who's closest to the customer. So that's again where business expertise comes in terms of training, in terms of awareness, in terms of tools, and in terms of the right areas to pick. And the fourth is agility. In terms of opportunity mapping, it can quickly redeploy resources using the gaps that data points out. So I think these are areas where business expertise comes in.
That was absolutely crisp. Anubhav, you have been an innovator. You have been in the insurance, general insurance space. You have talked about how organizations have rethinked the process of, say, for example, motor insurance, claims, etc., using video analytics and things like that. What do you see coming, especially in this new age technology sites, making a bigger impact in the innovation side today?
Yeah, no, I think it's a moment come like which happened when internet happened and the things evolved for the startups and when the 5G will happen, things will change. I think a similar thing are going to happen in insurance sector as well. So 2-3 things are happening now, right? Like the first big thing is happening, the entire EV revolution, right? The entire electric vehicle revolution is going to transform a lot of areas where we wanted to do things, right? Like we wanted to do pay-per-use car insurance for a long time. We wanted to do driving behavior-based insurance for a long time, but we were not able to do because the ecosystem didn't exist. The moment you have an electric vehicle coming in, anyway they have an operating system. Anyway they will have a native connected car ecosystem there. So a large part is going to evolve on the motor side, on the vehicle side, because of the EV revolution. The second big thing which is happening at the macro level is the entire NDHM platform which is happening. So whatever UPI did to fintechs, right? So a lot of banks, we all know, right? The UPI rails are actually the IMPS rails, essentially, right? And everybody had it. But the moment UPI happened, a lot of banks couldn't really evolve so fast. And the startups, use that and created so many frictionless experiences for customers. I think the same thing is going to happen through NDHM as well. Today is very difficult for a new insurance company to go to so many hospitals because standards are different. One hospital uses some other terminology, the other will use some other terminology. People keep going from here and there, right? So I think that's going to be a massive, massive shift as well, which I can see happening already as we speak. Like there are multiple bodies trying to solve the same problem, right? Whether it's the SWAS or NDHM. I think the entire health stack, right, as we are calling it now, is going to become big as well, because these are the two important ecosystem changes which are happening at a macro level at a very, very rapid space, right? And third, of course, the more and more investment which is going to come into India, right, with the new FDI rules being changed. It's been, I think, a year since the announcement happened. We still haven't seen that kind of inflow of the investments in the country. Maybe it's because the chairman is not there in IIT right now, and I think so many macro things are happening any which way. But I think once those things get settled, I believe the way we see insurance today and the way we see it in like 5 years hence is going to be completely different because of all these three things which are happening in the ecosystem in a macro perspective.
Interesting. Rohan, from your eyes, if you look into what do you see is the kind of innovation that is going to happen or the ecosystem of the future looking like for the insurance industry?
In trying to push the envelope, big organizations have created their own innovation labs. They're doing a lot of product thinking, and not just product thinking, but also process thinking, innovation across processes, innovation across technology, customer experience. You have a lot of startups coming and taking a horizontal and a vertical view on trying to solve for specific segments, whether these are for certain consumer categories or whether these are for certain health businesses or life businesses. So I think largely you will see a lot more thinking happening in the ecosystem, right? The second part that I see is also that, this will only happen if we continue to coexist and collaborate, which means that recognizing our own strengths. Can a large reinsurance business start to recreate a DNA of a startup? Possibly, but it will be hard. right? So I think understanding your role in the value chain and trying to coexist and collaborate on the best outcome, where it's a win-win situation for the carrier, the intermediary, or the insurtech, or the consumer, is sort of has to be the way forward.
Wonderful. I think that's very well put. There are still a lot of possibilities there. The sky is always much more brighter. And coming to you, Beros, you have been seeing the industry from various angles, and you also will agree to me with me if we say that the Indian insurance industry is really very, very underinsured. At least the Indian population is underinsured. Unlike in the US kind of countries where every second thing can be insured by the organization. So what are the possibilities that are going to come up in the immediate future and in the long term, according to you, when you gaze the crystal ball, and what kind of role will technology play into this?
So when we look at it, I think I agree with you. We are very underpenetrated. General insurance is around just 1% as compared to anywhere outside of India. And you look at life insurance also, it's quite less, 2.2. So our penetration is really low as compared to the other countries. But if you look at China also, it was very low. So they have really taken some steps and they've identified certain areas, and then they have grown in the past few years. Otherwise, China also was comparatively lower as compared to insurance penetration. So I think if you look at those and you learn from other jurisdictions as to how they have penetrated, clearly what we are seeing as an ecosystem. And before I come to the ecosystem, just something on what Anubhava had mentioned about blockchain and Jitendra had mentioned. So Deloitte did a survey of various industries and on what is the technological spend that they're going to have on various products. And surprisingly, blockchain was last in the queue over there. Though I think it's a very good product, I think it is required, it is a must. But somewhere the spend, when we checked with a lot of insurance companies, that came last in the line, and they expect only around 16% of the increased spend may be going to blockchain. The top three which came up in that spend documentation was artificial intelligence, which Anubhav very clearly mentioned. Artificial intelligence is something that is going to be there. Cloud was the next big thing which is going to be there. And the third was data privacy. So data privacy is something which people are spending on, and they think that technology will have to evolve in that area. So those are the thinking which comes in. Now, when you look at the ecosystem, what we believe is that it has to coexist with fintech. There's no doubt about it. Both industries have to coexist. But I think insurance has to look beyond fintech also. They have to be like a business solution provider. So when insurance looks at it, they need to look at something more than just the insurance sector. They need to look at non-insurance sector to see how they can collaborate with non-insurance sector to give a solution to a person.
Great. I think that were some very interesting insights, especially your study on what the insurers feel in the market, and especially with relation to blockchains and all. So I think we have had some fantastic perspectives from each one of you. Thank you so much, ladies and gentlemen, for making this a wonderful conversation. Thank you for all your interesting insights. Thank you very much.
Thank you so much.
Great.
Thank you, Babu. It was a wonderful conversation.
Thank you, everyone. Pleasure meeting all of you.
Hello, friends. My name is Manoj Agrawal. I'm the group editor at Banking Frontiers magazine. And today I'm here to welcome you for a very interactive discussion with Mr. Prateek Agarwal. Prateek is the fintech advisor at Gupshup, a well-known company. He's also the founder of Truth's Advisors. So Prateek, welcome to Banking Frontiers. Welcome to InsurTech 2022. and I look forward to having a great interaction with you, as always in the past.
Thank you, Manoj. Thank you. Pleasure being here and representing Gupshup.
Great. So Pratik, I have 5-6 questions. Let's see what kind of insights we can share with our audience at INSURENEXT. My first question is, what is the impact of chatbots on user engagement at the individual customer level and at the strategic business unit level? What trends are you seeing?
So I think, what is the impact and what will be the impact, or let's say what can be the impact. So I think, the impact of chatbots is minuscule right now. We haven't started using it, right? If we pick up our interactions with, say, top 10 brands in past 1 week, right? How many brands have we interacted with a chatbot, right? So I think the usage of chatbots itself is very less today. However, when we talk about what would be the usage of chatbots in future, then I'm sure it will be more than like 90%. Reason being that we all want to be now profitable and reach the maximum customer segments, right? And chatbots and technology is the only way you can do this, right? Chatbots are where we are investing today, and very few cases are there right now where you can see high impact, and in future you can see majorly every conversation you will have with brands will be through conversational messaging. The future on an individual customer level is going to be super personalized, and at probably an organization level, this would be something which will get you less money and more interactions, right? You can expect as high as almost 80% of cost savings, which we are seeing wherever we have implemented these bots recently, right? And you can cater to millions of customers with just one code.
Assuming a lot of call center agents are going to be replaced by chatbots for the day-to-day engagements, then what transformation are we going to expect in the call center, in the contact center, for the organization, and maybe for the individuals as well?
I don't think so. It's going to get affected when we look at the long term, right? I think it's only going to grow. The reason being that if you see today, you are catering to only a segment, say 100,000 customers, right? The moment you introduce, and what we are seeing is that with unicorns, with brands, you are acquiring millions and millions of customers, right? And today, if you're catering to only a small segment of customers, you are catering through call centers, right? When your base expands, when you start, offering bots and standardized services, and when you are using, when you're offering all the interactions through bots, right? Humans will still command a major, stake when it comes to complex problems, right? And something which will happen overnight or over few weeks or few months. I think the system needs to be trained. You can think about like hundreds of use cases, and out of 100 use cases, probably just around 60% of those use cases would be standardized, but 40% will still remain. And those 40% will need humans to interact and to further simplify it, which will get added to your bot.
How can bots be designed, or how can this whole interaction be designed to be more effective using bots?
So what we have, we have implemented this solution for one of our companies, SBI Life, or one of our clients, SBI Life, right?
Okay.
And right, that too over bots. So it's as simple as, just imagine if your policy was expiring or you wanted to renew your policy, right? You have a reminder. The reminder carries a dynamic link. You don't have to enter your policy number, which you would do if today you want to do it, right? I mean, I was paying my insurance policy premium the other day, and literally I had to go find for that, policy in my laptop somewhere, which is like 10-year-old, pick up the policy number, enter my date of birth, find my premium, select it, pick up a payment gateway, and then pay it, and then I would get a receipt, right? Imagine scrapping all of this and just receiving over a chat, right? A dynamic link which carries your name, which knows your policy details, which knows when it is getting expired, which knows what is the last payment method you have used. Probably a UPI payment link would be given, or any auto pay, right? You click that link, all your UPI apps pop up, you enter your UPI password, and your policy is paid. It's not only just the policy paid for a consumer, but it's auto reconciliation for the insurance partner as well.
Apart from operation, making it easy to renew, other issues that the insurer discussed with you.
So Manoj, if you look at the entire, if you really dissect the entire journeys, right? You have a pre-purchase, you have a purchase, and you have post-purchase, right? In pre-purchase, you would have product inquiries, you would have something like a new product information. It's more of a discovery, right? It's about asking questions. It's about new policies available, right? And then during the purchase, it would be KYC, it would be payment of the first premium, it would be setting yourself reminders that and auto pay. Do you want to be notified 1 week in advance, 2 days in advance, 2 hours in advance, right? And if nothing happens, then you want to talk to an agent, right? In post purchase, you have a customer support, right, which talks to you about what's your policy, what are those factors which you should know, right? Is there any transaction like your claim settlement, prepayment, or etc., and alerts or receipts, or which you require to submit for your tax, right? So I think all these journeys can be managed over bots.
So claims is again a very complex, can be a very complex customer engagement. Yes. So are bots beginning to play a role there, and what impact have they had so far?
So I think claims, as we discussed, right? Claims is a very structured process, right? Where you have certain policy definitions at the time. What claims team will do is typically check your bills, check whether this falls into this category. Yes, no, there cannot be any gray area, right? It is the same guy who would be processing. I mean, two different people processing it would arrive at the same claim amount, right? When that is the thing, why the claims are so late, right? That is because the current processes are so dysfunctional. If today, instead of all of this, right, I know that this customer has a policy, and over a bot, I have all these pre-curated and personalized journey for each customer, right? He just needs to scan the bills and send it across, right? The bot can ask all the information, the amounts, etc., right? And you have 90% of stuff ready. What probably insurers can do is verify all those claims, right? And processes in less than probably, I mean, I would expect processing less than 1 day.
How effective have bots been in engaging with prospects, new prospects?
So I think that's where I think the experience goes, right? Today, when we interact with brands, the brands come up with the toughest problem today with you, and want to implement the toughest problem with your bots. I think the right way to approach this is pick up the simplest problem, right? Because the most 80% of 80% of your queries would be only the top 3-4 issues, right? 80-20 ratio is everywhere.
Absolutely.
So pick up a simplest journey. Right, which are again standardized. Reminders, engagement, like sending your policy details. Just say hi. Enter your validate the customer. If it's a WhatsApp, then you don't even need a validation because the mobile number is the unique one. You can just share your policy with the customer over a WhatsApp chat, right? Or any other medium through a GIF, right? So I think the brands get too worked up with the bots. I think it's the simplest form available.
How can the artificial intelligence strategy that an insurance company can build to support this chatbot? Should it have multiple AI pieces, all of them interacting? Should have something unified? How can what AI strategy can maximize chatbot results?
So let me kind of, give you probably 4 sections of it, right? Or rather 4 ways to employ AI in your entire customer experience initiatives or enhance customer experience, right? One is with all that data you have as a brand, you have the demographic, you have the geographic, you have the purchase patterns, right? You have the repayments, etc. So can you make your bot experience hyper personalized? Can I make all these hyper personalized interactions more friendlier, right?
Okay.
And can I use my AI to predict the future behavior? Customize your journey touch points, right? Most insurers are already recording, when the customer interacted with them, what was it all about? What was the heated argument? Was it a heated argument that time? Or what did he rate? So using all these touch points which have already been there, right? Have you been recording? If you have been recording, can those recordings be used to make the engine more customer friendly and more futuristic? All that communication, even if it is a voice communication, right? Can you use, because I think all of us have started using Siris and Alexas, right?
So wonderful. I think the insurance sector can look forward to some fantastic new ways of engagement and powerful ways of engagement with customers. And so thank you, Pratik. Thank you for all those insights about chatbots and AI. And we look forward to the insurance sector showing some results out of all of this.
Thank you, Manoj. Thank you so much for having me. And it's always a pleasure to interact with you.
Thank you.
Good evening, everyone. We are in a very, very interesting time where there are a lot of uncertainties that are happening around us. Maybe we can call it as a climate change. It could be a pandemic, or as insurers or those people who are really protecting the interest of the economy, as well as the proprietors and the individuals against all these uncertainties. Now, the question is, what are the risks that we are exposed to today? And how are we going to address these issues as something which is very, very interesting? And we have some of the experts from the general as well as the life insurance industry with us today to discuss on what insurance company mitigating those risks, not only for the customers, but also for themselves. So I have great privilege in introducing the panel members over here. We have Mr. Vikas Chaudhary, who is the appointed actuary, as well as the Chief Risk Officer of Future Generali Life Insurance Company. Right. We have Mr. Jaspreet Singh. He is the Chief Risk Officer of Reliance. Greetings, Mr. Jaspreet. Nice to be a part of the have you here. Yeah. We have Mr. Siddharth Kaushik, who is the Chief Risk Officer of Canara HSBC. Good evening, Siddharth. It will be a pleasure to have you on board this evening for this discussion on risk. Mr. Vikas, you have been having a very, very important role of handling the appointed actuary as well as the Chief Risk Officer. So I'll start with you. See, all insurers are interested on improving their top line. Actually, the premiums have to be more. Then only the valuation, everything goes up. So naturally, everybody is very keen on increasing the top line. But while we are increasing the top line of premium, we also have something from the regulatory framework which says you need to maintain adequate solvency margins to ensure this premiums are safeguarded. So the regulatory framework, they are doing their job. So how do you see this as a risk? Is it good, or you feel there could be some changes on this?
Thank you, Ravi, for giving me this privilege for such an august gathering. Thank you, my fellow participants. Also, quick disclaimer, any views suggested are of personal opinion, not in capacity with respect to employer, my profession, anybody linked forever, whatsoever form. So that's the first disclaimer. I think it's a fair question. We are into a regulated regime when you talk about extremely regulated across the world. So for here, the way we look at solvency, solvency at the end of the day, it is a measure of capital requirements, right? In India, when we talk about life companies, or non-life for that matter, insurers are currently subjected to Solvency 1 regime. Effectively, a Solvency 1 regime, when we talk about the UK kind of a language about that, a Solvency 1 regime means it's a factor-based capital, which means the higher is the business you will write. If the reserves are higher, you want to keep a factor based on reserves, keep a factor on sum assured or sum at risk is what we call it. When you talk about capital, there are two things you need to look at. How do I protect solvency? Is it a risk? Two things, I'll go a bit mathematical given my background. You look into how do I improve my available capital? How do I reduce my required capital? So that's the way I typically look into. Now, available capital, right business, I need more capital. Pretty easy. I ask shareholders to give me equity, right? That was the scenario a decade, 2 decades before. Capital is a resource which is non-renewable. You can't get it every time. Shareholders have stress. COVID has actually shown that. I think regulator has been quite nice on that, and they did realize this about 5-6 years because 5-6 years before, and they actually had a regulations called other forms of capital. COVID has been the time where people have used other forms of capital, one being sub-debt, which is subordinated debt, which is subordinated against the policyholder's liability. Both life and non-life company have been really thankful to the regulator for such kind of a regulation, which has come extremely helpful during COVID times. If you see, many insurers have come through. However, there are challenges even in this. For example, you can use share capital, you can use sub-debt, but sometimes if you're not listed, if you do not have enough branding, you typically end up taking the sub-debt from your own parent company, which is a proxy to capital. So how do you manage as a management from a capital standpoint of view? You manage available capital, you can manage through P&L. How do you manage your P&L? You write less capital strenuous products, for example, through reserves, or you manage your OPEX. Standard answer, as I said, you look into depreciation, you look into whether I could go in a CapEx model and an OPEX model such that I take care of those expenses and so on and so forth, right? But there are other forms when we talk about available capital from a P&L standpoint versus available capital from solvency calculation purposes. In India, there are certain assets which are inadmissible. So you need to really look into how do I improve my inadmissible assets? For example, GST credit. Input credit has been quite a challenge, and I'm again going a bit technical into that, or getting your insurance recoveries. Those are another one. One unique thing, Ravi, which has happened, especially for life, is that they have started managing their interest rate risk through derivatives, which is majorly being FRA. If you would have heard every time people talk about life companies, forwarded agreements, because they give guarantees as nominal interest rate guarantees over long term. And anything which is marked at market value, the regulator says any upside you cannot take, but any downside you have to allow for the capital calculation purposes. So suppose even if you're not selling, the unrealized losses, you can't take that as a credit, unrealized gain, but unrealized losses, you have to actually book it. That's pretty challenging. So you need to be very, very careful when you enter into such kind of a derivative arrangement. As far as required capital is concerned, there are ways, if you look at, there are capital intensive businesses in life company, and I'll speak a bit about life. There are capital light businesses. For example, protection is a little bit capital intensive. So even though there is a penetration gap and a protection gap, if you would have remembered recently, I looked at it, 83% is the protection gap. Not necessarily with respect to people, but with respect to the sum assured they actually have taken. That's the gap. But in that gap, protection also is capital gussing business. More so for group business, group protection business. And also, now those are certain management, there are how do you do, but there are certain challenges from regulatory standpoint. I think we are working towards it, and regulator has been quite warm on this and welcoming on thoughts about how do we manage this capital. Also, there are big inconsistencies, especially for 1 year businesses between life and non-life, and they're trying to control over there, and we are working towards that. So those would be my in summary to manage the risk and mitigate.
Thank you, Mr. Vikas, for the wonderful, clear explanation. We could get a lot of insight into that. So I move on to now, Siddharth. Now, this has been an unprecedented times. The last 2 years, if you look at, most of the people have been working from home. There have been a lot of lockdowns, etc., etc. And now it has affected the revenue of many of the companies. And naturally, the available funds also has come down. Do you feel this will be affecting the insurance business, or on the contrary, you feel this is an opportunity where actually insurance companies, since they cover uncertainties, this is a time for us to get into and pounce into the market? From a risk perspective, how do you foresee this situation?
Thank you so much, Ravi, for the question. And I would like to thank, first of all, for the opportunity to be a part of this esteemed panel. And again, all my views are based on my personal experience. So pertaining to your question, Ravi, there is always a saying, and I always say these sayings have some meaning to it. Challenges comes with opportunities. And this is the way we look at it. If you look at the data, all the major, I would say majority of the insurance companies have grown in the last 2.5 years during the pandemic period. So while, yes, there has been issues in terms of the economy, there have been issues in terms of lockdowns and all. However, I guess this was an opportunity which everyone has utilized to the, I would say, in the right manner, because there was an enhanced awareness amongst people also, wherein they could understand that, yes, this is an opportunity time and it's very, very important for something like a life. And I'll not say even life insurance, even the general insurance when it comes to the health. So that enhanced awareness definitely helped everyone. The most important thing would be to go ahead and continue with the momentum. But yes, with this comes certain associated risks. And I always say risks are constant. It's the residual risk which increases or decreases basis the environment, basis various activities. So certain things like when there was a remote working, people were selling, they were not able to go ahead and meet the customer face to face. But then as a risk management function, we need to be vigilant and we need to be dynamic enough to go ahead and suggest controls which can minimize the risk and at the same time provide that enablement to the business. Yes, there are opportunities. We need to go ahead and I would say use those opportunities to the fullest, but at the same time, we need to be vigilant enough in going ahead and having requisite frameworks, which ensures that whatever we do remains within the appetite of the organization, remains within the appetite of the regulatory ambit.
Thanks, Siddharth. That's wonderful. Looking at a risk as an opportunity as well as a threat. Just one single question on this. Have you revised the risk registers? Because this is a global phenomenon. It happened only in India across. As a risk manager, do you feel the risk registers have been revised due to the pandemic?
Absolutely. I guess if the risk, I'll not call it the risk registers, but I'll call it the risk profile of the organization. There have been certain risks which have definitely, I would say, increased given the residual nature. And there are certain risks which are also the inherent nature. I'll say like information security, we were discussing offline some time back. While there have not been incidents many in the insurance space, but does that mean that we can just go ahead and relax? No, definitely not. I would say, sophistication of the threat vectors of this particular risk increases, and I would say brings to attention the fact that we as a life insurance or insurers need to go ahead and enhance and spruce up the controls and deploy the controls in the right manner with adequate monitoring. So this is just one example of information security. It comes along with other things also, as we were talking about the interest rate. We have seen the interest rates moving, I would say, big. So risks have changed the profitability. We saw tremendous increase in the number of claims from a life insurance space. So when you look at the profit numbers of various life insurers, that have changed. So yes, there are these factors which change the risk profile, and we need to be dynamic enough to go ahead and change the profile, look at what are the customized measures we can take from a short-term, medium-term, and a long-term perspective.
Oh, great. Thank you so much, sir, for the clarity. Now I move on to Jasmeet. I think Sundar has also joined. Jasmeet, one question for you. See, now this working from home, etc., is one area where people started. Almost everybody, whether he's a claims guy or an operations guy, especially in the GI space, almost most of the people are working from home. But the service parameters have not been affected because every company has taken their own methods of how to run as organization very safe so that the customer doesn't suffer. Right. But according to you, has it increased your risk profile of your organization because everybody is working from home and everybody is using Wi-Fi? That could be different hijackers who can get into the systems, do it. Number two, as the business grows, we have given applications to all customers, intermediaries, everybody applications. So everybody is using your company system to enter into. How, as a risk manager, you are being able to address these issues?
Okay, great. I think, Ravi, this is a very, very valid point which we've been debating and discussing. And apparently, this comes to everybody's mind that, when we are migrating to work from home, what happens, and I'm sure there has been a great transformation which has happened in the last 10 odd years, I would say, where, eventually technology has taken a very, very strong hold in the insurance industry. And, in last few years, we must have even observed that there are various organizations, which have just come as startups, but they are focusing primarily on technology. So their bread and butter, selling, everything happens on technology. And today, mind you, if any organization, be it a seasoned organization or a new organization, if they have to exist, technology is the key. But nevertheless, I think with technology, there are large number of responsibilities which kind of come on as a risk perspective. So today, we were, say, on a very on-prem kind of an approach. Now we are trying to kind of, look at an hybrid approach where you're moving on cloud. You're trying to kind of, outsource a few of the things which you were kind of keeping with yourself. So earlier you thought that I can do the entire A to Z of the bit. Now today you believe that, okay, let me do A to D, which is my expertise, hand over the next two parts to an expert who can probably do better than what I can. So, that's how this hybrid approach of cloud and your on-prem kind of a structure has really built in a lot of flexibility and also cost optimization. Because eventually, if you actually see otherwise, an on-prem kind of a cost is pretty high as compared to a kind of cloud structure. While I don't say that only a cloud structure is a great structure or an on-prem structure is a great structure, but depending on the nature of the application, depending on the nature of database, depending on nature of how you want to restructure or structure yourself, it would make a larger sense for you to take an approach which is in the best interest of your organization. So I think that is very, very critical from a risk perspective when people were moving on work from home, while fortunately, we always had anywhere processing kind of an approach within our organization, which is, we've been practicing since 2010.
Fantastic points. Thank you for the input, sir. Now, we have Mr. Sundar Natarajan from India First, who is the Chief Risk Officer. Good evening, Mr. Sundar. Nice to have you over here. So the question to you, now, everywhere in the corporate governance, we are talking about risk management is now moved to the next level, which is enterprise risk management. Now, the corporate governance, when you go to the board meetings and then you produce this thing, people are asking only about enterprise risk management. How do you see insurance companies have adapted themselves to the new enterprise risk management?
Good evening, Ravi, and thank you very much for inviting me on this panel. Delighted to meet Jasmeet, Siddharth, and Vikash. So, and very, very interesting question, something very close to my heart. And I'm sure it's close to my heart of my co-panelists as well, being CROs of their respective esteemed organizations. Enterprise risk management was a jargon, okay, and it is not one anymore. I would say it is on course to becoming reality. And if you were to use just the simple dictionary meaning of the three words, enterprise and risk management, enterprise, risk, and management, it is only that. Okay, practicing risk management across the enterprise, as simple as that. In an attempt to overcome jargons. So it's like this, the typical perception of risk. If you were to open your family WhatsApp group now, just as we speak, and ask a question, is risk good? Okay, the typical answer will be question mark or nahi or bad. And if you were to ask another follow-up question, what is risk? Describe an activity. The answer typically would be a poker game or a horse race or a roll of dice. And that's the perception of risk which has been built over time and which has always been pejorative. Risk is, and that feeling and that perception has fed into the boardroom and it has fed into organizations. Okay, so risk management, by virtue of that, risk management has also got viewed with that lens. Risk management, as some of my colleagues said, if we have to look at risk as an opportunity, and if we have to, which it is, if you don't take risk, you will not get a return. If the farmer doesn't go out in the fields at 4 o'clock in the morning, every day on day for 365 days, there is no harvest festival of Pongal and Lodi which can be celebrated in the middle of January. And you and I won't be eating food. And he will not get, he or she will not get any which they can have. There is a risk management committee and there will be a few top risks which will get discussed in that risk management committee. There would be good discussions. There would be good initiatives and risk mitigation measures talked about. But these would get relegated to the very, very top few 4 or 5. And, and then it would stop over there. If the risk and the outcome were to make or mar the business, then it would get acted upon. Else it will get sidelined. If we really need to look at ERM and implement ERM, it can make a world of a difference to an organization. If every single function has a risk expert, as we call it at India First, and that person practices risk management. And by practicing risk management, one need not do something dramatic. You don't need to go and write a thesis. All you need to do is keep it basic, stick to fundamentals, ensure that there are well-documented processes, ensure that those processes are followed, ensure that the function looks at exceptions to the processes on with regularity, and the function takes ownership for the exceptions. And these can give us bottom-up risks. Okay, these are the funnel which can give us bottom-up risks. We've started experiencing that already. And these bottom-up risks combined with top-down risks which flow from the senior leadership or the board make up the risk repository of the company. You are absolutely right. The earlier question which you asked has, with respect to the risk register in COVID times, absolutely, we've seen that COVID times have found new kinds of small risks which come up bottom up, which never would have got envisaged top down. And these today may not be making a big impact today, but may make a big impact maybe tomorrow.
Thank you, Sundar, for the clarity and very well explained about the enterprise risk planning. Thank you so much.
Ravi, I just want to add to this, if you may.
Please.
This would be interesting from someone's perspective. I took over this CRO role about 8 years back, and I'm a typical hardcore actuary by profession. So how do I perceive, and I just wanted to share my thoughts from a risk standpoint. I am looking from a risk which was 8 years back when I took over as CRO, but effectively an actuary. And what I looked at is how important this department is. What are the key points? So what I looked at is when organizations mature, companies like life insurance, which is always big, it doesn't matter from a size standpoint. It is a regulated entity, it does require many number of people. What happens from that is that people, and that's my way when I looked into it, the risk department actually cut across all the departments and provide a singular view across all pictures. And I'll give you an example to this. And I try to look into complaints, for example. Now, complaints is a silo department sitting in operations. But if you start analyzing complaints and the NPS score, you actually realize there are problems in your process. There are problems in your selling process. To an extent, there are problems actually in your project of recruiting people, because you're not actually recruiting the right people. And you start deep dive into each of these areas, that there are challenges in your own processes when it comes to service complaints. There are challenges in your customer journey, which is a problem of sales process, challenge and attrition. Then the recent example when you saw in 2018 was this ILFS scenario. And of course, it was new to me. It was people were exposed. And we realized that do we really have a risk appetite framework? So we had on paper, but when you really deep dive a clear risk appetite framework with respect to credit risk, with respect to investment risk, and more so these days about how much is your risk appetite to even retain the risk vis-a-vis how much you want to cede it to reinsurer. Now, do you have an organization-wise complete risk appetite framework? So, and actually can suggest again about this is the retention I should do. A CIO can say, oh, it's a good time I should invest in corporate bonds and so on and so forth. They gives 60, 70 best delta or equities, it's good time. But as an overall, have we tried to do a lot of stress tests? And that's where these CROs play a very important role from a mathematical standpoint to provide stress tests. And the last one I see is the role of CRO in the strategic planning of the organization. When companies prepare a plan of 3, 4, 5 years, and they have some targets, does enough stress has been done to do a lot of sensitivity and scenario analysis to show that if things go wrong, everything cannot be rosy, and these are your challenges and you need to act. But that's my two best when I look into from an enterprise.
I agree, and a very well touched point, Vikash and Sundar, thanks. One of the most important things, and again, being there in the risk throughout maybe my career, the most important thing from an ERM perspective, and now that we are seeing in more and more matured organizations, is the intertwining between the risk management function and the strategic discussions as well as decision making. Till the time risk managers or the risk management team is not completely aligned during those discussions and decision making, never ever will a company be able to have a successful ERM structure in place. So I guess that's one of the most important prerequisites for any ERM structure to be successful, that the risk management team and the risk managers have to be a part of those strategic discussions as well as decision making. It can be backed by mathematical calculations, it can be backed by experience. There are multiple facets to it, but yeah, that's one of the core to success.
Thank you, Siddharth. Now I move to Mr. Jaspreet. See, this is something which has been always been coming to my mind. See, till this Suez Canal episode happened, people have been talking about the loss of profit policies, etc., etc. But then this climate change is a new risk that has evolved across the globe. And most of the companies, even globally, are looking at climate risk as one of the very, very serious risks. Now, from an insurance company point of view as well, now, how do we foresee these climate risks in our books? And what are the new innovative covers that we can provide to our customers, taking from a risk to an opportunity? Yes, Jaspreet, I'd like to hear from you.
Yeah. I think great, very interesting point. So I think, for typically all the industries today, not just, I would say, insurance, I think climate change to humanity becomes a very, very important aspect and point to kind of, maneuver on, understand, and really kind of, work towards it. So just to give you a small kind of, a figure, which I'm sure will give you a very different perspective. I was just referring a McKinsey research report, which typically says that, there's an increase from about 2% of global GDP to more than 4% of global GDP in 2050, which will be induced to these climate hazards. So this is the kind of impact which we are kind of, looking at and talking at, which can actually wipe out various things which one can even, right now not even think of. Simple examples to give you, maybe, which comes to my mind is like earlier cyclones used to be, a primarily focused agenda on the eastern coasts. But then, in the last few years, we've seen that the entire belt has kind of migrated towards the western coast as well. And the way we have industries around the western coast, I think the exposures are way, way, very high. So I think, this is very, very critical for insurers to kind of, not just talk about it, but even kind of deeply understand, maybe today there are concepts like stress test, where you do a total exposure against projective climate hazards. So what is it? I mean, to understand the risk exposure to of climate-related risk on their portfolios. So I think these kind of steps which are being taken further, I think as you asked that, what insurance companies should do. So I think the biggest thing which one needs to do is liaison with the regulators, the government, because I think these initiatives cannot be done in silos. This is a very, very large kind of initiative which needs to be kind of derived and worked upon. Otherwise, one small step taken obviously adds value, but it has to be, various steps together. So simple things which I can tell you, help organizations mitigate their climate risk. So what we've started doing is we've started engaging with our customers and started giving them risk management, facilities, which we kind of tell them that how you can prevent a physical climate risk, what kind of, shifting business models you can do, say from a transactional risk transfer to a indemnity payment or towards scaling existing incentives. We give rebates for using resilient construction material, so such kind of things really help, even the customer kind of build structures which are strong enough and, can be a little difficult, kind of prone to earthquakes and so on. You can together build that culture. And, government can create that kind of mandate that in low-lying areas, you will not allow this kind of a construction, you will put restrictions. And it has to be a global phenomena altogether. So it cannot be worked in silos. I think that's something which is very, very critical and should be really not just discussed, but implemented.
Wonderful, Jasmine. That's a wonderful. It's not only educating the insurance companies, but also the customers who are actually going to suffer. That's a fantastic point. Now, I come to Sundar. One question I'd like to ask is, see, as risk officers, probably we are also doing a lot of fraud analytics. So what we do is sometimes we do it internally. Sometimes there are companies so similarly, such a situation could happen in India as well, wherein we may not like to do it for nature of confidentiality. We would like to outsource this fraud analytics to an external agency, a third party. Do you feel that's a risky thing, or you feel that's one risk mitigation measure, Sundar?
Okay, thank you, Ravi. Very interesting question. I think the first time if I recollect right, I heard the word analytics. It was about in 2010, and I helped implement an analytics model for persistency in the organization. And my first impression was very bad. I thought that it was glorified Excel, and the analytics, and it was a firm a consulting firm which helped implement it. I thought that we knew far better than the consultant. But the trick is this, anybody who's a good analytics expert and is only a good analytics expert may not necessarily be effective. Okay, so that applies to fraud analytics as well. So it has to be a convergence of knowledge of fraud and anti-fraud management and analytics, which will kind of help us find the light. Can we outsource it? Yes, of course we can outsource it. There's no challenge as long as we have good legal protocol and data protocol followed, which I think we can. The larger thing is, will it be effective? The effectiveness quotient will go up only if the organization is fully entrenched and involved in developing it. And from that point of view, if you ask opinion, I would not like to outsource it. I would like to develop it, customize it to my own, and take inputs from expert organizations, take inputs from organizations which provide distributed ledger services, like your IIB or like any of the credit bureaus. To answer that very specific question, it can be, but I would prefer not to. Having said that, what I would say is fraud analytics also should not get restricted to a very matchbox view. Fraud analytics has to be looked at from right from not even purchase to servicing. I would say even prospecting. Before prospecting a customer, what is the target customer base? Okay, what kind of are we talked about climatic risk, and we talked about areas susceptible to climatic risk. Okay, there are areas susceptible to fraud risk. Okay, so segments which are susceptible to fraud risk, do we want to sell in those segments? It starts right from there, and then how do we do a pre-sale? How do we conduct the sale? How do we evade challenges of AML? How do we evade challenges of impersonation? How do we evade challenges of digital risks which come by today? How do we evade challenges of overcoming phishing attacks in digital transactions? How do we evade challenges of customer impersonating during the servicing stage? Okay, and how do we evade risks where it matters the most, claims related risk? How do we evade policies which get sold after somebody has died? So it is across the, not only I would say the policy life cycle, but from the time you envisage the strategy to sell right up to claims or right up to maturity. We need to look at fraud analytics at every level. And there are propensity models function. And the charm is if it can be actually owned by the function rather than by the analytics team. So similar to what I mentioned in ERM, analytics has to get owned by the function, and they have to actually use it. Else it will become an ivory tower. The analytics team will show it in their PPT and win awards, and we won't get any benefits.
Okay, thanks for your inputs, Sundar. So Siddharth, question before we wind up the session. See, there have been a lot of telecallers who have been calling people and then saying that, see, your life policy, you have to pay one more small amount so that you will get a lump amount. This is something which normally is something that's almost, whether it's X company, Y company, a lot of telecallers who are doing this. How is the life insurance company, we are addressing all these issues?
So see, for that, I would say I'll break it into two parts. For this particular issue, one is a very, very proactive customer communication. And when I say a customer communication, it's not only, I would say, segmented to your customers. It has to be more widely communicated. So you can use mediums, social media as a platform in going ahead and educating the customers. But yes, that's having a limited reach because not everyone will be going ahead and visiting. What more important would be, what are the controls you are putting at the back end? Because as Sundar rightly mentioned, that there are segments wherein he would not want to sell. I would say it even starts from this perspective. Are there people you would want to be there in your organization? Do you have models going ahead and looking at the human resource capital and getting them onboarded? So it starts from that perspective, from that very point to a point that, okay, if there is an insurance sale, how as a company you are ensuring that the sale has been done right? So you need to have checks and balances at the back end. Majority of the companies that now I'm seeing have a concept called as a validation call or a welcome call. And now technology is being also used wherein video validation callings are being used. So all these things are being done up. But yeah, the most important thing is, as I said, with the strategic alignment, are you doing it on 100% of your base, or are you doing it on, let's say, a 30 or a 40% on the base? That depends on the risk appetite of a particular organization. Majority of the companies are now moving to a video-based validation calling, covering maximum of the base. The regulator has been proactive. So there are some regulatory asks wherein we have to share the policy document with the customer. We have to share a key information document which highlights the key things. So all these things are there in place. But one thing that I would want to say is how effectively you are doing it. So just doing, and I'll just pick up an example of a validation calling. Are you going ahead and doing it as a tick box exercise, or are you doing it with the genuine intention of making the customer aware of those things? One is a telecaller calling up, selling a policy, then another telecaller calling up and just narrating the entire story. You have this policy, you have this, you have this, you have this. It loses interest. How you are engaging the customers? Are you just telling him, or are you asking him that, okay, are you aware of this? Are you aware of this? So that's where I would say the real risk management, and as CROs, I would say it's very important for us to look at these processes at the grassroots level, how they are getting implemented. And I'm sure with all these new technological investments, they are really helping us out in going ahead and making customers aware before issuance of the policy as well as post issuance of the policy. And then there is a new concept known as engagement calling. So people are going ahead. So generally in insurance, what used to happen that you sell a policy, there is a touch with the customer, then there is a renewal, there is a touch. Are you engaging with the customer during the tenure of the policy? So that those are a couple of things that I'm seeing majority of the insurers are coming up with, and I guess we are moving in the right direction.
Thank you, Siddharth. So I would like to thank all the panelists, Mr. Jasmeet, Mr. Bikash, because Sundar and Mr. Siddharth for your sparing your time and sharing your thoughts on the risk next. Thank you so much.
Thank you so much.
Thank
Ravi.
you.
Thank you so much to my panelists.
AI to be amongst us to share his vision, his observation, and his thoughts on how the industry should leapfrog towards the future. Mr. Mathur started his career with the New India Assurance Company as an officer, direct recruit officer in 1987. He worked with the company for 9 years, and then at IRDAI, his activities include registration and supervision of insurance and reinsurance companies, registration of insurance brokers, intermediaries, corporate agents, and third-party administrators, amongst all. He has also been associated with IFSC Task Force Committee and has represented the authority in several international conferences. He will be sharing some wonderful insights with us at what his vision is for the future for the insurance industry. Please join me in welcoming Mr. Suresh Mathur, Executive Director, IRDAI. Thank you.
Thank you and good afternoon to all of you. At the outset, I would like to congratulate the organizers of this Banking Frontiers for this virtual meeting. As envisaged by the organizers, this would be an ideal platform to understand the challenges and opportunities for all the stakeholders in the insurance domain. I am happy to note that there are awards recognizing the efforts put in by various organizations, I think in 13 categories, and this act will motivate many of us with their efforts to further the cause for the insurance industry. So before going further, it is important for us to understand the role of the regulator. So in order to set the context, the mission statement of IRDA includes the protection of policyholders' interest, ensuring speedy and orderly growth of insurance industry, speedy settlement of genuine claims, and to promote fairness. It also includes bringing in transparency and orderly conduct in the financial markets dealing with the insurance. So our mission also talks about bringing optimum amounts of self-regulation in the day-to-day operations of the industry consistent with the requirement of prudential growth. So this is what the mission statement. The authority was set up in the year 2000 to liberalize the insurance industry and to create more awareness about insurance and to increase the insurance penetration. So this can be said that this was the objective. And I'm happy to share with you that we have been successful. The increase in the insured population is the testimony to this. In insurance, there are several classes like life, general, and health, which cater to different needs of the human and the society. We may note that regulator has set up a robust regulatory framework in the area of solvency management and regular monitoring of insurers to ensure that they remain healthy and are able to pay the claims of policyholders as and when it is due. Further, insurance is one of the key components of the economy which ensures availability of long-term capital for the infrastructure and for the country. Then investment of insurers fund is basically and primarily in government securities to ensure that the investments are secure for the policyholders. Having said that, this is the most important area in which the current environment is health insurance as of now, taking into account that the majority of population is still uninsured as of now. So I'm talking about the present pandemic. It is observed that the entire world has witnessed the onset of pandemic driven by the corona disease, as you all know. India was not an exception, and we have also suffered a lot during this pandemic. So IRDA, being a responsible regulator, has taken serious steps to ensure that on one hand, the population has a choice to take COVID-specific products, which includes, so I will just shortly list out the initiatives which the regulator had taken during the pandemic times. We had issued a circular advising all insurers to expedite processing of claims relating to COVID-19 and to ensure that the COVID-specific claims are not repudiated without being reviewed thoroughly. For those who could not renew their insurance, then we had also issued clarification that the health insurance policy that cover the cost of hospitalization would also cover the treatment of COVID-19. Then we had also advised insurers to make available group health covers at available cost to various organizations, employers, and establishments. We had also fixed a time of 2 hours for granting both cashless pre-authorization and at the time of discharge of the insured patient from the hospital. So we had said for the COVID claims, within 2 hours, they have to settle the claim, the TPS and the insurers. In the wake of second wave, the turnaround time was further reduced to 1 hour from the time of receipt of all necessary documents from the hospital. So the TPAs and all the insurers will have to settle the claim within 1 hour. We had also issued guidelines regarding telemedicine. In terms of that guidelines, all insurance companies were advised to allow telemedicine services as part of the treatment subject to the terms and conditions of the policy contract. Then we had another important area was that we had introduced standard COVID-specific products for short durations, like 3.5 months, 6.5 months, and 9.5 months, with common policy wordings, and which will basically to address the basic health needs of all general insurance public by providing financial protection against COVID-19. And all the insurance companies, general insurance companies, have to make this product available. So this was the direction issued by the authority. All general and health insurers were mandated to offer this standard indemnity health insurance policy known as Corona Kavach. So this was another product which was introduced by the authority, and it was mandated that all insurers will have to make this product available to the general public. Or general health and life insurers were also encouraged to offer Corona Rakshak product. This was a benefit-based product. Then we had also advised all insurance companies to ensure cashless facility is made available to all empaneled network providers or the hospitals. Renewability of a standard COVID-specific product was allowed in October 2020. Migration or portability facility was also extended for Corona Kavach policy to any other comprehensive health insurance policy. We had issued clarifications in March 21 that in the unlikely event of hospitalization following adverse reaction to COVID-19 vaccine, hospitalization is covered under health insurance policies subject to the specific terms. Taking the prevailing COVID situation into consideration, timelines to offer and renew short-term COVID-specific health policy, including Corona Kavach, was also extended till March 2022. Then insurance companies were directed to ensure smooth availability of cashless facility through all network hospitals. And all the claims can be filed electronically, and there is no need to file hard copy with the insurer. And all the processing of health claims can be done electronically. So these are some of the areas where the authority had given specific directions, particularly in health insurance. During pandemic times, outflow of claim was expected to be higher, resulting into loss in investment income as well as the higher claim outflow on account of claim. So this impacts the financial position of the insurer, and hence their solvency level may be affected. So it was necessary, it was necessitated that the most frequent examination of the solvency position of the insurer may be done. Hence, we had started monitoring the solvency position of all the insurers with an interval of 1 month each. So every month the solvency position was monitored by the authority to ensure that they are healthy, and in case of any deficiency, action can be taken to ensure that the policyholders are getting their claim on time, and the policy and the insurers are ready to discharge their obligations towards the policyholders through the contract. So these are some of the initiatives which the authority had taken.
As a part of this privilege of having your thoughts about how the industry has to go to the future. So, sir, recently there were news items about the general insurance sector being allowed to treat investment as an important part of their offerings as well. which otherwise was only limited to that of the life insurance. How do you see this as accelerating the business prospects for the general insurance sector?
As you have rightly mentioned that this has been the talk which is going on, but I think we need to take a legal view on this, whether or we need to do some tweaking in the act and regulations, then only it will be possible. As of now, savings element only is allowed in the case of life policies and not in non-life policies. This was discussed, this has been going on discussion particularly for health. Like for health policies, if this saving element is allowed, then at the young age, you can start saving.
Along with insurance.
Along with insurance, and say, if you have, say, 5 lakh cover or 10 lakh sum insured, if it goes more than that, that from the savings part, you can pay the claim, but it has not happened so far.
Okay.
It may take a bit of time. It is not.
I was curious to know, how does India stand as an attractive destination for insurers all over the world? What kind of rank does India have?
India stands a very good chance. First thing is the political climate is very stable in India. Lot of investment is being flown from other areas also, and also from the insurance. Second, it is one of the emerging markets where growth is there. In other developed countries, insurance-wise, it has reached saturation level. But in India, still growth is there. So growth is, there is so much uninsured population still is there. Then again, as I had mentioned, that the adequate cover is not there. So there is a plenty of scope for the insurers to come and do business here. The growth is there.
In terms of Make in India initiative of the government of India, and in the budget, the huge capex expansion, this will obviously drive quantitative growth.
Yes,
but
yes.
The qualitative change better.
Qualitative change will come. Now everything is being driven by the technology. So things will move faster and on real-time basis. So maybe it will reduce frauds also. So qualitatively, it will improve, certainly. And we are going in that direction.
Technologically, there has been a lot of work in the insurance tech as well as in the regulatory tech. And we have been seeing a lot of initiatives even in the IRDA sandbox, which has been taking place for some such time. How have you been observing the participation of the companies in this sandbox, and as a regulator, seeing encouragement in this area? How are you encouraging the sector to grow?
Yeah, the regulatory sandbox has been very encouraging. Particularly the response from the insurers and other stakeholders for the regulatory sandbox. The basically sandbox requirement is done to reduce the risk. Basically, only a target market is there. Only in that area you do the experimentation, and if it is successful, it can be expanded. And small tweaking in the regulations also can be done. We can introduce InsurTech also in this, the technology also, particularly in health policies like the wearable devices and all, and in motor insurance also. The usage of the vehicle, the premium should be based. If somebody is not using the car, still the same premium is paying. So those things have come in the regulatory sandbox, and on most of it we are working on it. And let us see. I think some good results will come, which will benefit the policyholders and other stakeholders also.
Sir, thank you so much for the wonderful insights you have shared during your keynote address. We are really honored to have all Hello and welcome to Banking Frontiers Live. Today, we are having a fantastic insure talk and with one of the leaders of the insurance sector. I am talking to Mr. Amit Malik, who is the CEO and MD of Aviva India. And Amit is going to share with us a lot of interesting perspectives about the industry, about the futuristic technologies, about what he is doing at Aviva, and what the industry can see in the next few years to come. Amit, welcome to Banking Frontiers Live.
Thank you for having me. It's always a pleasure to be with you.
Thank you so much, Amit. Amit, you have been riding this industry wave of 280 billion industry, and today the world is also seeing a lot of potential for growth in this industry. Global investments are also trickling in left, right, and center with the policies of the government. How do you see, or what in your vision is the prospect for this sector now?
I think my own vision from a sector standpoint, three things that I would like to say is first, for the sector to be successful going forward, it has to be more agile and innovative. And when I say this, I mean is the sector needs to respond very dynamically to the changing consumer needs and make it more personal for the consumer. The personalization element has to come. We need to have products, which cater to the growing and the new needs of the customer rather than only plain vanilla life, general and health insurance. So, someone may need an employment guarantee protection insurance going forward. That is something that is futuristic that, we should look at. I think when I talk about being innovative and being agile, I also want to just briefly mention that as a sector, we need to then look at our underwriting policies and be able to manage risks more smartly. So that's the first. Second is technology-led. I think if you look at insurance as a sector, COVID has got a lot of companies to expedite their journey of digital and tech. But we use a lot of technology, but we are not a technologically led sector. We have to become a technology-led sector rather than a sector that uses technology. So that the entire customer journey from discovery, consideration, purchase, and servicing has to be rethought in a digital. So that's my second piece. The third piece is evolution of the marketplace. We see marketplace in e-commerce. I think in insurance, the marketplace is there. It has come a long way. But as I look at the future, it will evolve. And when I say it will evolve, it will be a combination of digital and offline. So digital and brick and mortar, online, offline, that will be the combination. And that's where the world is trending. So those are the three things that I see from this sector standpoint.
So what kind of scope of product innovation? You obviously spoke about employment guarantee insurance. What other kind of product innovations do you see coming in the near future? Or what are those products that are there interesting in the global market, which you see should come to India?
Actually, this question is very close to my heart, Babu, because I personally am very passionate about increasing the financial literacy of a common Indian. I feel we as Indians need to become a lot more financially aware. It's not about insurance. It's about financial products, the financial portfolio. How do we manage our risks individually from a financial term? I think that is very, very important. And that's very passionate. That's a passion for me. When I look at the customer, like you said, I think we need to find new ways to reach the customer. Use smart nudges to make people think about insurance. COVID has helped a lot. And also the need for insurance. But along with the nudge, we also need to help them arrive at the right decision of the product. So that not only from an insurance product standpoint, but also their life financial goals. I think the other way to look at it is when you look at the whole India and you look at the spectrum, there is this whole base of the economic pyramid, which is where we as insurance company need to focus on. We need to have business model and products that provide or administer and help that strata of consumers mitigate their risk. I think that is very, very important. If you look at the insurance regulator, they have come up with products which are referred to term and annuity, which are standard, which are easy. Very good because that caters the need. I think there's a lot of regulatory support in going towards that. So other than that, we need to look at our own underwriting policies, like I said, our own risk management policies.
So how are you seeing InsurTech as a player in the market? Is it too much of complementing or competition or co-option that you see in the market with the InsurTechs?
InsurTech for me, if you ask me, I see them as collaborators. I think there is enough space for traditional companies and InsurTechs in this sector, and I'll explain why. I think InsurTech and industry collaboration will facilitate innovation, will enhance the customer experience, and contribute to the overall growth of the sector. And why I say this is because, some of the traditional players bring in strengths like customer loyalty, brand equity, customer data, which is very important for our sector. And InsurTechs bring in the ability to impact each leg of insurance journey, whether it is lead generation and fulfillment, whether it is policy issuing and smart underwriting, whether it is management of managing the customer, whether it is customer buying propensity. All of these needs can be filled by the InsurTech. Today, all the InsurTechs who are selling insurance are actually helping the traditional organizations by tapping into untapped market and expanding distribution, which is good from a penetration standpoint, which is good from a industry standpoint. So I think both, if you look at the future, both the traditional players will retain ownership of the end-to-end customer, while InsurTech will, as digital enablers, will drive the adoption of digital technology, value chain, and help advance the digital transformation, like I said initially. So it's a pure play collaboration where all will win.
So in this insurance ecosystem, what is the next level of data collaboration? So Sahmati is something which RBI had formed for the banks to share their data. There are organizations globally like F-Data, which is sharing the data for the financial services institutions. So from your perspective, what is the kind of collaboration in data sharing that is required for the organizations in the insurance sector?
I think it's a great question. I think it's the need of the hour, if I say. There is a need to have a central repository, right? And in a country like ours, between insurance company, it is going to be very, very helpful if we know about the claim experience, the fraud experience, someone who's bought a second policy, third policy. Why do a fresh KYC? So I think it will help the insurance companies. It will help the consumer. It will facilitate doing it at a faster pace. I don't know whether you're aware or whether the viewers are aware that the India data center sector is thriving. Absolutely. As of today, the country already has 75 to 80 co-location data centers. And this sector will grow anywhere between 10 to 13 to 14% over the next 5 to 6 years. So this is where the data. So we have all the technology and the ability in the country to be able to leverage the data that we talk about. With the new technologies like geospatial, location intelligence, all of that coming in will help insurance companies, work much better from both the customer standpoint and the risk standpoint, which will improve like I always say, improved customer service, far and faster and accurate decision making when it comes to the policy issuance, more responsiveness on the claims process, supporting the claims process. You can do it much faster. You don't have to wait for individual investigations to happen. I think that's very, very important. So I think that's one ecosystem of data sharing that we talked about. The second ecosystem that I always believe, which I always think the insurance industry is known as, is the ecosystem of truth. I think that ecosystem will always remain, and when I say ecosystem of truth, that will continue to be. And, I break it into two parts as I see it. First is being truthful at the time of purchase. Have you sold me the right policy? Will it fulfill my need? Will it fulfill my family's need? Will it get me what I want to be? And the second truth ecosystem comes into being is at the moment of truth. When you deliver what you have promised to the individual, either in this life or after the individual, to the family that you promised. I think that is one point that I feel is the essence of all ecosystems that we build, whether digital, data, technology. That truth, and that is what keeps the sector, the way it is, and the whole loyalty factor comes in. So I think that's very, very important for me to look at. But going back to the data question, I think insurance companies will at some point need to look at something like a CIBIL score in the future to determine who should be issued a policy, what the premium should be, how much of lapsation of policies you have done in the past, what is privacy? Are you a serious individual from a protection standpoint or the need of insurance standpoint, or are you going to come in and just take it from a tax saving standpoint? So I think all of that data differentiation will give us an edge and will get us to do more for the right customer.
So what is your perspective on blockchain and the kind of ecosystems that are supposed to be created there?
Blockchain, I think, is a technology whose time has come. I think, a lot of people have been talking about AI, ML, and all of those technologies, but I personally feel blockchain's time has come. See, blockchain has this unique thing about saying, the sanctity of the record and the trueness of the record is very, very important. It is very difficult to alter or change a record in isolation on a blockchain. And I think that gives the technology a lot of advantage. Entries can be made into the record. Updating is controlled. It allots an exclusive identification to the user. You can use that to manage the process of issuance or insurance or do the checks while still not disclosing the whole information during a transaction process. So it maintains data privacy. It only gives you what you take. It is authorization based. Especially for an insurance company like us, both at the time of issuance and at the time of claim settlement, it's easier to validate the truthfulness of the claim. We can look at the historical data of the client through the blockchain, what all activities the client has done, whether fraudulent, not fraudulent. Those discrepancies can be caught up beforehand. You don't have to wait till the last minute. Also, if you look at blockchain, if we were to look at that futuristically, I think it will bring down the administrative cost for the insurance company, and that benefit can then be passed on to the policyholder, which is a win-win for the company and the policyholder. The whole contract of insurance can be done via the blockchain. The registration of the claim, the third-party data, all of that can be done via blockchain. So I'm very excited with the advent of the blockchain as a technology.
Now let's come a little bit to Aviva and what you have been doing in all these years, how you have been growing, how last year has been for you, and what is your growth path now towards the future?
So, for us, I think it's been a journey where I think there are certain strengths that we've had. Last year was was a year of very proud moment for us. We were the most trusted brand for 3 years in running in the private sector. I think that's running insurance company. That's a very good achievement to have. Right. If you look at this year, we have shown growth over last year. So, that's been a good journey for us. We have used COVID to adapt and embrace digital in a very, very big way. We have looked at our processes from a customer standpoint and said where we could influence, whether it's our claim settlement process, whether it's our customer service bots. We have enhanced all of those customer service options for our customers. But one thing that we learned in COVID over last year was that one is to have the technology for the customer. The other is to also educate the customer. How do you use the technology? See, the idea is not to tell somebody at the other end of the phone saying, dear customer, you can pay your renewal by a credit card, by an NEFT, by a wallet. But the idea is also then you educate that customer how to do that. And how to assure them of data, how to assure them of safety, how to assure them of security, how to encourage them to do that. So education of that whole customer piece to use technology has been a very big learning for us from that standpoint.
What new kind of regulatory reforms do you think can aid the industry further according to a wish list kind of stuff? I'm not talking about anything.
So, actually, I must tell you that the regulator is very, very open, and I think I've seen a lot of change in the regulator. The regulator is very receptive. We've had 2 meetings with the regulators as CEO in the year till now, and both the times they have asked for our wish list. Whether it is on reinsurance support, whether it is on COVID times, on claims, they have been very, very open. Like I told you, regulator has come up with 2 products on term and annuity, which I think is a very, very good step. The regulator is proactive. The regulator has a vision of expanding the penetration in India, and it's facilitating and working. So I think regulator, I think the regulator has been very proactive. As soon as COVID started, they also put the customer at the center of everything, and then they were very, very proactive. They were very very collaborative with the insurance companies. They understood our own challenges, they understood the customer challenges, and they tried to build a bridge where we could support the customers. I think it's been a change, and a very, very welcome one. So I think no two ways about the regulatory support and the proactiveness that they have shown. So,
how have you been seeing this? Getting a better value out of the customer or increase the wallet share?
I think all of us learned, like you said, the customer only expects you to, or has a touch point or a need at the time of renewal when they take the policy, or at the time of renewal, or if they have a question, or if they have a service that they need. But I think the COVID, it's been an amalgamation of the needs from both sides. We very proactively went back to our customers and assured them when we were there. When the world stopped, the lockdown happened, we took it upon ourselves to educate our customers on how we were there, how we could service. The whole idea, Babu, was that not even a single customer who had to renew a policy should be left out, irrespective of the lockdown, irrespective of what we could not do. We endeavored to reach each and every customer to say how they could renew the policy so that they could be safe. That was the first. We also reached out to them, telling them that we are there for them without any expectation, just to say we are there for you. You could reach us through these, constant communication, constant touch, asking them to look at, the services that they can do from their home, what is important for them, educating them on why it's important to renew. We took that as an opportunity to educate customer on why it is important to renew your policy.
Fantastic. I think that was a great overall perspective.
Yeah.
But I had a really very interesting conversation, and I learned quite a lot from you as well, from your experiences. So thank you very much for that. And we look forward to more and more such wonderful conversations with you.
Thank you for having me, and very kind of you to say that. Thank you very much.
Thank you very much. Hello and welcome to INSURENEXT Awards and Summit 2022. So you have all had a wonderful session throughout the day. You have listened to our luminary speakers. You have listened to the CEOs of the industry doing their crystal ball gazing. You have listened to the entire set of interesting fireside chats that we have had. And we have learned a lot on how the industry is innovating, how the industry is accelerating, how the industry is enrolling, and how the industry is leapfrogging toward the future. Well, friends, moving on from here, now is the time that we are all looking out for. Yes, we are going to announce the first ever INSURENEXT Summit and Awards by Banking Frontiers. This is the first such initiative that Banking Frontiers has undertaken in the insurance sector to bring out the Banking Frontiers INSURENEXT Summit and Awards 2022. We have clearly created some wonderful sessions or awards where we will be trying to identify the best possible players from the insurance sector. Let me also inform you that these awards are on the basis of information that is received by the respective insurance companies. And you will all agree with us that it is impossible to do a lot of due diligence physically into these respective organizations. What we have done is taken the nominations under letterheads of each of these organizations. We have run it through our jury, who could put their experiences, their reading, their understanding of the industry, and evaluate these nominations based on the information given to us. And yes, then we came out with some of those interesting insurance companies which have really made a difference in INSURENEXT Summit and Awards 2022. We have some wonderful categories. We have chosen categories in terms of innovation, digital transformation, risk management, CSR initiatives, best companies which have been working in the area of digital transformation, and much more. We have about 17 categories, and we are here to present in front of you all these awards and accolades that would be handed over to these respective insurance companies. Well, you and the awards now. Before leaving, I would like to thank the Herculean task that the team at Deloitte has done for us to make sure that we have a wonderful process for jury, and they made it very easy for the jury to take the decision. We have had two sets of jury. One is a expert jury and the other is a CEO jury. The expert jury made sure that they meticulously went through each and every nomination and aligned it with their information about the industry to make sure that we choose the best. The handpicking of the best is a credit given to the joint effort of both Deloitte and our expert jury, and then they were certified further by our CEO jury. The expert jury comprised of Mr. Ravi Seshadri, who is a former compliance head of Bharti AXA General Insurance, Mr. Jitendra Agarwal, who is the former digital transformation head at HDFC Life, and Mr. Arjun Bhaskaran, who has several accolades in the insurance sector, including being with the first TPA MediAssist and with several other TPAs, Unit Trust of India, Axis Bank, and several other insurers, and also setting up one very interesting underwriting organization in India before taking over into a very interesting fintech company as the CIO of the company. In addition to this, we have 3 CEO jury members who have adorned us with their presence and participation. This include Mr. Arijit Basu, the former chairman of SBI General Insurance. We have Mr. Deepak Sood of Future Generali and several other insurance companies where he has been having taken the position at the helm. And we also have Mr. M. Narendra, the former chairman of Indian Overseas Bank and former executive director of Bank of India, and who also heads the financial services industry wing at ASSOCHAM. So friends, thank you very much for being a part of this conversation, this awards, and INSURENEXT 2022. We welcome you to enjoy this awards function. Thank you very much and have a great INSURENEXT 2022. Thank you. Thank you very much. We would now like to invite you to have few glimpses of the wonderful jury meeting we have had and what the jury has to share about some of the nominations to give you an understanding of the process we have had with our wonderful process partner, Deloitte.
So now here we have 3 categories. Now here the size matters. You know, SBI General is one of the -- 1 company, and in that company they have almost 100% ensured that within the category of course, you see the claim in events also very less, 0.25 and 5 days. So I feel SBI, we can look at that here.
Actually, I also feel SBI because in terms of volume,
yes,
it's very high. Number two, if you look at the ratio of claim received versus settled, SBI has got 59.58, well compared to Shriram 43.24, which means a more number of claims have been settled.
See,
so
my view.
I find Shriram has given quite a good data.
Yes, no, that particular thing, Sri Mitra, if what they are claiming is even reasonably true, then having 23 diverse services on one customer-facing app is indeed creditable. So
Yes.
my vote will Sri Ram.
So anybody else other opinion? And Mr.
No,
I agree with both of you, sirs. I agree with both of you, sir. Yeah.
Sir, just I wanted to add a couple of perspectives around between Tata and Bajaj. More front-ended was a common thing which many organizations have done it.
Yeah.
And actually it has been rampant in the year 2020 itself by Bajaj. And extensively it has been not only applied in Bajaj General, it has been also applied in Bajaj Life. And that has become a norm for them. So the very fact that now bringing the data which is coming up from the front end, which includes the content in the form of recording as well as images, making a backend ready and scalable for future support. That's where cloud becomes a obvious need. And that's what this organization has actually done in 21. So Bajaj certainly scores much higher. In that relative pegging, Tata is just following it.
See, I find that what SBI has done on two areas, the underwriting and also on the cyber risk assurance, what they have mentioned, they have done it at a very detailed level, which nobody else have done. See, they have said, they calculated the internal data, the external data up to the 99.5 percentile. Value at risk. This kind of things, in my observation, I have not seen in other organizations. So my vote goes for SBI Life.
So clearly SBI is focusing on process. Bajaj is focusing on technology. And Reliance Nippon, I think, is a mixture of process and technology.
Yeah.
So the domains for all three are slightly different and not overlapping.
वही बोलते हैं, कोई uniformity
Oranges
नहीं
and
कर सकते हैं.
apples, which is always very difficult.
Zoom Insurance, they've got 117 employees and they've got work from home flexi timing, need-based leave policy, no staff cuts, industry best salary raise and incentives, and they've paid bonus of 40% of salary.
So here it is primarily the flexibility to work. That is their normal. Okay. Next, what same further data is there?
Yeah, they have given their what of flexi working hours. Here, the addition to employees during the year was 58 and reduction was around 30. Monthly attrition ratio is 2.43.
A payment platform is also an ecosystem, no doubt about it. I think we need to have few more to be able to give that, or maybe we can give a consolation or whatever if it is a really good innovation.
So here I liked the concept of reaching to the unreached. So that here the first sentence is to solve a problem of large number of insurable lives which go uninsured because self-employed and informal sector employees who cannot provide standard like is in SME.
Businesses need to engage with their customers meaningfully in real time to drive revenue, customer satisfaction, and market share growth. In a world of smartphones, messaging apps have seen large-scale consumer adoption across the world. Customers would want to chat with businesses they engage with, just as they would with friends and family. Earlier engagement formats, such as web and app, were structured formats consisting of screens, tabs, and buttons. They required humans to behave like computers. But messaging is natural and intuitive and conversational. Conversational messaging enables businesses to chat with their customers, just as friends and family chat with each other. It is the most advanced format for engagement. Conversational messaging enables human-like conversations on commerce, marketing, and support, on messaging channels that customers are already comfortable with. People don't want to commit to downloading any more apps on their mobile devices, but they do still want to be able to talk to a hotel or restaurant or taxi services, for example, at the time they need to use that service. A conversational messaging platform provides two distinct but interconnected capabilities: the ability to define conversational experiences using chatbots, and the ability to deploy these experiences on any messaging channel using a messaging API on the GupShop conversational messaging platform. GupShop's conversational experience building toolset that includes the bot platform, conversational marketing tools, and GupShop's own IP messaging channel, GIP, is tightly integrated with GupShop's single API. Messaging. A business is always on and can converse with a customer 24/7 in any language. A business can handle millions of queries at one time, and these conversations can be highly personalized. With the help of AI and natural language processing, with a conversational messaging platform, marketers can create interactive and personalized conversational marketing campaigns across digital and physical media. Businesses can send messages with images, audio, video, and documents, cards, and interactive buttons on any messaging channel, and can integrate conversational messaging workflows with existing customer support tools, customer relationship management systems, and marketing automation systems, to name a few. Conversational messaging with a combination of conversational experiences deployed across messaging channels is the new digital front door and warm host that your customers have been craving for. Conversational messaging is the future of customer engagement, and it is already here.
Thank you, Mr. Nair, for giving me this opportunity. Thank you, Mr. Nair, for giving me this opportunity, and a very good evening to you, ladies and gentlemen. My name is Sushant, and I'll be your host for this mega event of INSURENEXT, which is a carnival for the insurance sector. This is the first time that Banking Frontiers has embarked upon creating a focused platform for the insurance sector, comprising of life, non-life, TPA, broking, valuers, and all the important constituents of the insurance sector. InsureNext is not just a platform for honoring innovations, but at the same time, it is a platform to inspire the insurers with some of the best practices in their insurance industry. Without any further delay, I would like to proceed towards the announcement for the first InsureNext Award 2022. I hereby will define the categories for the awards. And the first category is Best Claim Settlement, Life Insurance. And to present this award, I would like to invite Mr. Jitendra Agarwal.
Hi, this is Jitendra Agarwal, the founder and CEO of Relventa Solution. It has been my pleasure and honor to be a part of the jury forum of InsureNext, a award and conference 2022 created and initiated by Banking Frontier. Among the various nominations which we have received, it has been my pleasure to now announce results of Best Claim Settlement in Life Insurance. And the award goes to Reliance Nippon Life Insurance. Congratulations to the entire team of Reliance Nippon in especially COVID time, handling a claim at the back end, which has got a very high impact at the front end for all those customers, which really matters in terms of getting the settlement and getting that settlement on time. So good work. Keep it up. Congratulations once again to Reliance
And the next category is Best Claim Settlement, Non-Life Insurance. And to present this award, I would like to invite Mr. Deepak Sood.
Hi, I'm Deepak Sood, a jury member. It's been an honor to be a jury member in this process. We've had some very, very interesting nominations. We've seen some great responses, and it's been a very difficult choice. I'm here to announce two categories and the winners. The first category is the best claim settlement in the general insurance space. And the winner for this category is SBI General. My heartiest congratulations to SBI General team for the magnificent work that they've done and for the award. As a jury, we are also awarding a certificate of merit to Shriram General Insurance because of some great work that they have done in this space also during this period. So heartiest congratulations to Team Shriram General.
And moving on to next category, Best Insurance Broker of the Year. And to present the award, I would like to invite Mr. Arjun Bhaskaran.
The award for the Best Insurance Broker goes to Beacon Insurance for the outstanding service quality and the business growth that they have achieved. Congratulations to Beacon Insurance for achieving this award.
And the next category is Best Digital Transformation Initiative, Life Insurance. And to present this award, I would like to invite Mr. Arijit Basu.
Hello, everybody. Welcome to the Banking Frontiers INSURENEXT Awards. I am Arijit Basu, and it's my privilege to have been a part of the jury. The first award category that I will be announcing is the Best Digital Transformation Initiative for Life Insurance, which indeed is one of the most important things that we need to look at. And to announce the winner for this year is Shriram Life Insurance. They have done a wonderful work on a rural initiative for digital transformation. This company is focused on rural, which again is the need of the hour because insurance needs to penetrate deep into the country. And they have used digital to be able to reach out to rural. Laudable initiative indeed. Many, many congratulations to Shriram Life Insurance.
And the next category is Best Digital Transformation Initiative, Non-Life Insurance. And to present this award, I would like to invite Mr. Babu Nair.
Good evening, ladies and gentlemen. A warm welcome to you, and I am Babu Nair, the publisher of Banking Frontiers. I am here to announce two very good awards that are won by forward-looking insurance companies at INSURENEXT 2022. The first award, which I am going to announce you, goes to Bajaj Allianz General Insurance for Best Digital Transformation Initiative, where they have used a wonderful mix of cloud, processes and technology to leapfrog their processes in the core insurance. Considering the fact that Bajaj Allianz is such a huge insurance company and the number of policies they handle, and the kind of complexities of the various policies, especially in the general insurance sector, the jury has decided to award this wonderful innovation and digital transformation initiative to Bajaj Allianz General Insurance Company. Congratulations to Team Bajaj Allianz General Insurance. A hearty congratulations and a very, very big hand for Team Bajaj
Moving on to next category. Best Risk Management Initiative, Life Insurance. And to present this award, I would like to invite Mr. M. Narendra.
I am Dr. M. Narendra, former chairman and managing director of Indian Oats Bank and advisor Encube Collaboration. I have been associating with the banking frontier in the banking and innovation and other tech awards in all other respects for last more than 10-15 years. Now today I have the pleasure in announcing the awards in the category of Best Risk Management Initiative and in this particular category of life insurance. And I'm very glad the #1 award in this category has been given to Bajaj Allianz Life Insurance in the category of risk technology. So I congratulate Bajaj Allianz for this particular award.
Best Risk Management Initiative, Life Insurance. And to present this award, I would like to invite Mr. M. Narendra.
And in the category of risk process, areas of external and internal security, SBI Life Insurance have got the special award.
Best Risk Management Initiative, Life Insurance. And to present this award, I would like to invite Mr. M. Narendra.
And it is also felt by all the jury members, we should consider for a certificate of merit in this category to Reliance Nippon Life Insurance, along with, of course, Nippon and all Reliance Nippon Life Insurance also has participated in all categories. And in this particular category, we thought it is ideal that we give a certificate of merit. So I congratulate the Reliance Nippon Life Insurance, the team, for this award. Thank you very much, Banking Frontier and the team led by Babu Nair, Mr. Agrawal and Mr. Ashish Verma. Thank you.
And the next category is Best Risk Management Initiative, Non-Life Insurance. And to present this award, I would like to invite Mr. Ravi Sheshadri.
While deciding on the category of awards for the best risk management practices in the non-life insurance sector, it was really a tough job for the jury to decide because there are 5 or 6 companies which were really closely chasing. But at the same time, a company that has done very well in terms of risk management, not only for the internal staff, but also enabling the SME field. Very nice and easily adaptable for the small and medium enterprises, a risk management philosophy, as well as using technology to help all these risk management practices. The award goes to Bajaj Allianz General Insurance Company. I heartily congratulate Team Bajaj Allianz for this wonderful performance.
And our next category is Best Operational Excellent Initiatives, Life Insurance. And to present this award, I would like to invite Mr. Manoj Agrawal.
So friends, I'm happy to announce the winner in the next category, which is the award for Best Operational Excellence Initiative in the Life Insurance category. And the winner today is India First Life Insurance. Heartiest congratulations. This company settled rupees 6.5 crores to unclaimed beneficiaries in a span of 3 months. They have 7,000 beneficiaries covered under this. The total unclaimed amount remaining at the insurer was only rupees 19.55 crores. This initiative was recognized by the jury for being specially difficult to achieve, and heartiest congratulations to India First Life for this achievement and this award.
And our next category is Best CSR Initiatives, Life Insurance. And to present this award, I would like to invite Mr. Jitendra Agrawal.
The next category is Best CSR Initiative in Life Insurance. CSR as an initiative has got larger social impact. Given the fact that in last 2 years, there has been a larger demand of an organization bringing an emotional connect and making relevant initiatives. Many initiatives have been taken by organizations. Noteworthy, SBI Life Insurance under the spirit of We Care, where disease and malnutrition has been really supported to really make an impact at a finer mile level. Congratulations to the SBI team in selecting those initiatives, executing those initiatives, especially in the COVID time. The second award in this category goes to Aegis Federal Life Insurance. Aegis have been in the forefront of nurturing talent, working around students and making them create a growth and development in their life and achieve certain career aspirations. So congratulations to the entire Aegis Federal Life Insurance team for managing this CSR initiative in a true spirit of Dil Se. Best wishes to the entire team of SBI Life Insurance and Aegis Federal Life Insurance in continuing their CSR initiative. Thank you.
And the next category is Best HR Initiative. And to present this award, I would like to invite Mr. Manoj Agrawal.
Friends, our next award is for the Best HR Initiative in the Life Insurance segment. And the winner for this, I'm proud to say, SBI Life Insurance. Heartiest congratulations, SBI Life. What has this organization done specially in HR? Considering employee well-being as a key factor in determining its success and effectiveness, some of the important COVID-19 initiatives are tie-up with Apollo hospitals to provide isolation rooms for COVID-positive employees. It tied up with the renowned digital health and wellness app to provide it such as calorie tracking, one-on-one nutrition and fitness coaching, as well as diet and workout plans. It provided ex gratia support to families of employees who lost their lives during COVID of an amount ranging from rupees 30,000 to rupees 50,000 per month. So this and other notable achievements are what has helped the jury recognize SBI Life as a winner for INSURENEXT 2022. Congratulations.
Moving on to next categories. Best HR Initiative, Non-Life Insurance. And to present this award, I would like to invite Mr. Arijit Basu.
The next category is Best HR Initiative for Non-Life Insurance. And here I'm happy to announce that the winner is HDFC Ergo General Insurance. What they have done is indeed laudable. They have taken many initiatives to have a more inclusive workplace, which is the need of the hour for our country and for all corporates. And secondly, they have taken a very special initiative for reaching out to the specially able, something which we all need to encourage. So kudos to HDFC Ergo General Insurance for doing it, and congratulations once again to them.
And our next category is Best Customer Experience Initiative, Life Insurance. And to present this award, I would like to invite Mr. Deepak Sood.
And now, jumping to the next category, which is in the life insurance space, the Best Customer Experience Initiative. And the winner in this category is India First Life Insurance. Heartiest congratulations to the team at India First Life Insurance for the great customer experience initiatives that they are taking. Thank you very much.
And our next category is Best Customer Experience Initiative, Non-Life Insurance. And to present this award, I would like to invite Mr. Arijit Basu.
The next award that comes up is Best Customer Experience Initiative, Non-Life Insurance. And the winner is Tata AIG General Insurance. Tata AIG General has done wonderful work in using analytics to be able to give a better customer experience. And the results have already shown in a short period of time. The customer is the focus of all that we do, and using the latest digital technology to improve customer experience is indeed praiseworthy. Congratulations once again, Tata AIG General Insurance.
Moving on to our next category, Best Product, Non-Life Insurance. And to present this award, I would like to invite Mr. Babu Nair.
Ladies and gentlemen, this award, which I am going to announce, is for Best Product Innovation Initiative in the insurance sector. And this award for the Best Product Innovation Non-Life Insurance category goes to Shriram General Insurance. Has done a wonderful job in its fire insurance policy, which it has brought out. And the beauty of this policy, which is called as fire loss of profit policy, is where the organization has not only just covered the damages due to fire, but also the opportunity lost due to the fire, and made it very, very interesting for its customers. Kudos to Team Shriram General Insurance Company. A very big hand to the team for their innovation case. Congratulations.
Let's move on to our next category, Best IT Initiative. And to present the award, I would like to invite Mr. Ravi Sheshadri.
Today is a world of technology, and deciding a winner in the space of IT initiatives is really something very, very difficult. But a company that has clearly come out very well in terms of technology, servicing customers, providing the best of the opportunities, ensuring that they reach out to the maximum masses through their technology network, has been a clear winner. The award goes to Team Policy Bazaar for a wonderful performance in the new technology initiatives. We heartily congratulate Team Policy Bazaar for this excellent initiative.
And our last category for the evening is Best InsurTech. And to present this award, I would like to invite Mr. Arjun Bhaskaran.
The winner of the InsurTech of the Year award is CoverFox for the innovative customer app that they have launched with excellent customer experience, comparisons and recommendations for the buyers, and the service options. So congratulations to CoverFox.
We would also like to strongly mention our wonderful jury who has taken all the efforts to evaluate all these entries, along with our knowledge partner Deloitte, who has made this happen. Now, may I request Mr. Manoj Agrawal, the editor of Banking Frontiers, to please take over the session and express the vote of thanks for this wonderful function. Thank you.
Friends, it is always fulfilling to see a major project bear fruits. And that is exactly what all the stakeholders must be feeling to see InsureNext start off as a flower bud today morning and turn into a flower in full bloom by the end of the day. Excellent topics, excellent panel discussions, excellent presentations. All these add up to make InsureNext 2022 an apt beginning for the insurance sector as it starts the new year. The previous 2 years have been momentous, and the coming years look to be the same. May I take the liberty to say that 2020 to 2030 will be a landmark decade for the insurance sector. I am deeply grateful to all the people who attended this conference. My heartfelt thanks to our speakers, our panelists, our moderators, and also all our sponsors, including in Intellect Design Arena, Red Hat, Gupshup, and Freshworks. Lastly, the Banking Frontiers team deserves a loud applause for putting it all together. The operations, the communications, the database, the website, the coordination, and all the elements of a conference. Thank you all very much, and I look forward to seeing you again in Insurance 2023. Have a great day.